Hi guys, happy Friday.
Hello, hello, Nicole. This is Jay. How are you?
Hey Jay, I'm doing good. How are you?
I am doing just wonderful. Got some good news. I got approved for Navy Federal.
Nice. That's awesome.
That's something very nice that happened.
And you opened up a checking account and savings account with them?
Checking account and savings account.
Nice. That's awesome. Great job. Yeah, they're great because your credit's going to be in much better shape in no time. Did you see the results from your last round?
I did. I seen some big numbers on there.
Man, I'm gonna wait and share it with the wins of the week because that I was like, whoa. And that's your doing, that's not me.
No, that's all of us. We're a team.
It's a team effort, but you got to put the work in if you want the results.
No, exactly. You got to follow up, follow up, follow up. And, like you said,
Yeah,
it's
yeah,
business.
yeah, you do.
You don't take, no for an answer. You just hit them at a different angle.
That's right. That's right. You got to keep
That's
on knocking them
how we do
down. Keep on. That's really the key with credit repair is consistency.
it. Navy Federal, I was having one problem with them.
Uh-huh.
I have a I have like one of those printer scanner fax type of deals with Canon. So when I
Oh.
was scanning my driver's license, the hologram wouldn't show the security features. So
Oh.
that was holding me back, and I must have sent it like 6, 7 times. So I finally took a picture with the phone, and on the phone it came out beautiful.
Yeah.
The next morning, they sent me the email today in the morning. Hey, your debit card is on the way.
Oh, nice. Good, good, good. Yeah, they're a great bank. You could do a pledge loan with them. You can actually do a pledge loan pretty early on, like within the first 30 days of you opening up your account with them and just get another trade line to start building credit.
Okay.
The nice thing is those secured loans, aka pledge loans, they don't require a hard credit pull. So they're not looking at your credit although they're reporting to your credit, helping you, it's always best when your credit score isn't the best to have them pull it because what I was told by a Navy Federal rep was once they pull your credit, they have a copy of it, they have your credit score on file. So if they look at your credit, 3 months ago compared to now, they're going to be like, how the heck did you go from 500 to 700 in, a couple months or whatever? So they said it's best just to wait until your credit is into a better position to apply because that score is going to be on your profile,
I see. Okay.
which makes sense. I'm like, yeah, shit, that's a great thing to think about because you don't want your score. I mean, they're pretty lenient with their scores, but still you don't want to be trying to achieve high limit credit cards and have only like a 620 credit score applying?
Definitely. Understood.
Hey Nicole.
Yes. Hey, Marlon.
Hey, how are you?
I'm doing
I
well. How
got
are
a
you?
good. I got a little win too.
Nice.
I got a late remove.
Mm,
Yeah.
nice. Great job, man. Great job.
And
What bank was that with?
American Express.
Holy smokes.
So,
Wow.
but I'll explain how I did it.
Great.
So through all the things, through the grapevine, I emailed the CEO.
Oh, yep. Mm-hmm.
And so I did that like a Monday, say 4 o'clock. By
Okay.
Tu- by Tuesday, I had an email back and they had an account rep already on it.
Wow.
And she said she'll let me know by that, like it within a week. And then she said that she came back and emailed me, said she'll let me know by this Friday. They called me yesterday and told me they removed it and they sending out paperwork and it takes up to a month. But I
Yep.
told them
It does.
but it was just one. It was just one late. And I'm
That's
just, so
okay.
I would tell people like you can't have multiple ones, but it was just
Right.
one late. And when I put a letter, I use chat GPT, and I
Uh-huh.
told them I used the CARES Act when it was COVID because it was in 22, and I
Yep.
told them I was trying to buy a house.
Okay, good. Did you mention your profession?
No, I didn't even say that.
Okay, great. Great.
I
That's
just
good to
used
know.
it. I just said because I really don't remember how I was late. Be honest
Right,
with you. So
right.
and I just did that, and they came back with it and said they're going to remove it.
Man, that's so awesome. What a blessing. You know what was crazy is when I first got my American Express cards on the business side, I got too many at the same time. And there's
Mhm.
two cards that look exactly alike. There's the business plus card and the business cash card. Well, I thought they
Oh,
were the same card, right? So, because they look exactly alike. I didn't know I had five cards. I thought I had four cards. So the payment comes due for one of the blue cards and it's not set up on autopay. It's not even in my Amex portal. And they call me talking about you're late. I was like, what? So I finally figured out I had this fifth card that had like a $30 balance. And I ended up getting a late pay on the business side, but they corrected it for me because they could see that it was never set up. It was never inside of my app, blah, 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 blah. But
right,
it's like a one-time thing with them. You're right. You can't have multiple because they're not having it. And that goes to with a lot of the banks. If you have a single late payment, you can reach out to the banks. And you know what's crazy is like I posted content about that recently and someone made a remark and said, "Do you really think the CEO of the company checks their email?" And I wanted to be like, "Yeah, I do."
I, I probably was one of those ones, Nicole. I wouldn't have thought to even do that. But
Right.
I know, what's that e-commerce bulldog? He talked about it. I done heard it from like multiple people.
Yeah.
And you go to CEO email
Yep.
and the website, and they got the websites and they got the emails for every business CEO there is.
Yep. They sure do.
But I mean, I
Absolutely.
just Googled it and got it, and then I
Yep.
tried it.
Yep. Google is a hell of a friend right there. That's how I have been able to conquer a lot of things is Google and trying just to find contact information for people.
So now I just got to work on this charge off that I paid for that I didn't know pay. I should have, so it's kicking me in my butt. But
No, I mean, it's not that you shouldn't have paid for it because, never
well,
say never.
yeah, you're right. I didn't realize if I would have put paid with a deletion, that would have helped me out more.
It was with the original creditor,
No, it was through a credit,
a third party?
yeah, third party. It's
Yeah.
Capital One.
And Capital One sold it to
It's
somebody?
like a law firm in New Jersey.
Oh, okay. Yeah. So it's a third party.
Right. And
Um,
yeah, and then I did look. I went to the IRS and looked up the 1099, and there's not one. I don't have one for that. I don't have nothing for that. So
yeah.
I'm just
The good thing is though, is the legal company, are they reporting an account on your credit report as well as like they're not both reporting a balance, but are they both on there or is it just Capital One?
it's just Capital One.
Oh, okay, gotcha.
And even like I got a Capital One to 360 checking accounts, but you
Mm-hmm.
can see the card is on there too.
Yeah,
Like
that's how it was with Chase. I had some bad blood with Chase. They were one of the cars that went south on me when everything went to shit in 2017 for me. And when I got back into their grace, I could always see that card on my account. And that was one of the things that I had ended up having to settle with them. So it's not a bad thing. You can go back to Capital One in the future if you wanted to, right? Also,
they
I
send me
had this
offers now.
happen. What's that?
They send me offers now to
Yeah,
refinance my
yeah,
car.
yeah. As soon as
I
your
don't
credit
want it,
score
but
gets over 600, they start pinging people to apply and they start giving them, the $200 starter cards or, they'll even probably give you a secured card. But they usually start people with like 200 or 300 bucks and then work your way up after six on-time payments to like 500 bucks or whatever. So that's it's good that way. But I did recently I was working with a gentleman. He had a similar issue, but it was kind of with it was not a like sold to a law firm. It was a smaller amount, but it was with Bank of America. And we were disputing it, and it does not go away. So finally told him, I said, look, dude, just pay it, right? Pay this little fee to Bank of America, and then it is going to be a lot easier to get off of your credit because once they get their money, they're not fighting you on it. A lot of times they don't respond, so they're not able to, the credit bureaus aren't able to validate it, so they'll take it off. And I'll be goddamn, within a month of him paying it, we were able to get it off of two of the credit bureaus. So it's only left on one. So I'm just like, I try to tell you, like before, sometimes you just got to pay these little things. And then once they get their money, they're not going to fight you as hard on it. And they're no longer going to be actively reporting a derogatory account. So that's positive too.
I probably need to send something to them directly.
Yeah, I would still
Because
dispute it with
I
the
paid
credit
for it. I mean,
bureaus.
it was a less amount, but that was like in August of last year. So I'm like,
Yeah, it still should be updated to zero. And I would dispute it with the credit bureaus directly. No sense of disputing with Capital One. I mean, you can put them on notice, but ultimately, we would need the credit bureaus to update it because technically you never paid your payment to Capital One. You paid it to this law firm, right?
yeah, should I send a letter from the law firm saying the debt was clear?
Absolutely. Absolutely. You should send any proof that you have to the
Okay.
credit bureaus to further, prove to them, hey, this should not be on my credit. It was settled, it was paid, whatever. You can tell in the letter they agreed to remove it, and continue to dispute it with the credit bureaus because you want to try to get them that off. Even though it's settled, it's not
Yeah,
positive.
that's holding me back from wanting to do other things because I know like to go get some say some Chase business cards because
Mm.
I got a relationship with Chase because they
Oh,
gave me they gave me the Chase preferred. I got like 18,000 with them, so I probably can
nice.
get some stuff with them, but I don't want to do it because I know I got that charge off on there.
Yeah, once you get that off of
Yeah, and I
Experian, you'll be good.
yeah, and they gave me that with that on there, but I know I got the my direct deposit, I got checking, savings, see, and I know why they gave it to me, but I don't want to push the issue. And I know with these different banks, I got like I said, I got a relationship with American Express, but I just want to get that off because I know I could get more.
Yeah, yeah, for sure. It's always better to optimize and just kind of wait it out to see if you can get it off because it could be an issue, right? If they didn't want to extend you credit, they could totally use that as an excuse.
Right. I think the bill had did that to me.
Absolutely. Yeah, absolutely. I had somebody today I was talking to, and I forgot who it was that he applied with, but basically, he hasn't had anything negative in years, and it was like a decline because of it had to have been this old student loan late payment because those were the only late payments that were on his credit report. And I'm just like, that's just like a nice way of saying no.
Right.
Sometimes they just use excuses, which I don't appreciate, but whatever.
Right. I'm gonna send that letter to the to the credit bureaus.
Yeah, I absolutely would. And then another thing to consider too is, and we're going to talk about this tonight some, but if you do happen to get a um a decline, you know, um you can call the reconsideration line and see if they would be willing to reconsider you because I just had someone deal with that with Chase because he had a fraud alert on his credit report and
Uh-huh.
they denied him. And I told him, I'm like, your credit is immaculate, and especially on Experian. I say you need to call them because you have a fraud alert, and I think that they declined you because of your fraud alert. And sure enough, he called them, and they were able to approve him, and he got a card on the business side and on the personal side. So that was a pretty good win, and it was all just because of his darn fraud alerts.
Wow.
Yeah. So I tell people that's the first thing you got to check when you're applying with these companies. You got to look at your credit reports and make sure you don't have any fraud alerts because that could be a huge reason as to why they decline you is because you have some sort of consumer statement, which is a fraud alert. A lot of people don't realize it, but it's just a statement that says, "Hey, I've been a victim of fraud. Call me if someone applies for credit because I need to approve it." Yeah, we've had some major wins this week. I'm super
Holidays
excited
weekend.
to man, isn't that exciting? Like just seeing it and that's just a week's time. So if we continue on this same path week after week after week, we're going to start seeing some major results, which is exciting.
It's very exciting, Nicole.
I love it. I can't I mean, I'm so excited about it because this whole like thing like changed my life, you know. I just remember like driving to work and I would have to drive to work 2 hours in traffic to work and 2 hours home in traffic from work. And I was living in the Bay Area and it's just like not the nicest area, right? And I'm busting my butt having to put in an extra 4 hours a day just to drive to work, which is such a waste of time. And I'm thinking to myself, there's got to be a better way. Like, there's got to be a better way. And I'm like, I can't do this for the next 5 years. So, credit was my way out of that. And it was life changing. You know, when you start learning about all of this stuff, you're like, oh my God, that's why I never had over a 700 credit score, you know?
Hmm.
I'm
And I
telling
was listening
you,
to an interview that Rick Ross did recently, and he was saying it takes 10 years to build a brand. 10 years to build a brand. And I'm thinking, you know what? He is right because I have not seen anyone out here that has been super successful unless they just got lucky or they already had an established, following because it does take time to build a brand. You know, there was one gentleman that I felt like he took off really quickly, but then when I learned about his background, he was in like an MLM credit repair company and he had really been doing this for many years, like 10 years prior to like him coming out online. So he already had the experience. He just wasn't doing the credit repair himself because it was with that FES company that I don't know what their name is now, but basically they would sell credit repair as kind of like a MLM. And the salespeople had nothing to do with the actual credit repair process, nor were they really able to guide people on building credit. They were just basically selling the credit repair part of it, which is kind of a scam because if you're not going to educate people about credit, what's the point, you know?
I can tell you, I was very, very, very happy and still happy.
Well, great. I'm so excited for you guys. Well, let's go ahead and get started because it seems like we're going to be a small group. I guess everyone has plans tonight, but for those of you that are watching the replay, this slideshow, guys, is 231 pages long. We're going to get through about half of it tonight and half of it next week because there is so much to cover. And when it comes to business credit, honestly, personal credit is extremely important. A lot of people might not like to think so. They might have seen things on social media, but what I do in this community is I retrain you to understand what is real and what is fake and how to spot these things because not everything that we see on social media is true. I will be the first one to say that I've bought into many things that didn't pan out the way that I thought they would, right? So, what we're going to be covering tonight and during this presentation, it's a two-part presentation today and next Friday. We're going to be covering the setups and the sequences to high limit funding, how to go after multiple rounds of business funding, how to utilize the banks, funding, business funding downfalls. We're going to be talking about business funding frameworks, why you guys keep getting declined and how to fix that. banks, we're going to be talking a lot about banks. We're going to be talking about SBA loans, what banks are the top SBA lenders, funding companies, so much more. We're going to be talking about a lot of this business stuff that the gurus just simply don't want to tell you, or, if they do try to help you get funding, they're going to try to charge you 10%, or they're going to send you to some crappy funding company where you're going to have some sort of crappy repayment options. Like, for example, this one gal that I'm working with, God bless her soul, I love her to death, but she did business with a gentleman on social media recently, and she helped one of her clients who has a successful mechanic business get $15,000 in funding. And I was like, okay, awesome, that's cool. And then when she started telling me about it, I said, well, this is a cash advance. Basically, this is a cash advance funding. And she's like, oh, well, yeah, it's like merchant funding. And I'm like, yeah, I'm very familiar with merchant funding. But basically, this man who did not even need the 15,000, she's new to this whole thing. So this guy on social media talked her into allowing her to get her client funding. He's going to pay probably $6,000 for $15,000 in funding. He also has to pay $250 a day back to that. Now, is that worth it? Hell no. He could have gone and done so many different things with the money that he already has to create better relationships, to get better funding. I get it why he did it that way, because his personal credit wasn't in the best position. But if he didn't absolutely need the money and he was just looking to build a relationship with a bank that he can go back to in the future, that doesn't make any sense to me. That's a prime example of predatory lending that has horrible terms, and people that are uneducated allow their clients to get predatory lending. I'm going to teach you guys how to avoid these things and understand what is a good deal and what's a bad deal, because a lot of us are going to be offered funding, but we have to understand at what price, right? Because we don't want to F up our first or second round of funding with, say if we get like a merchant cash advance or something like that, right? We're having to pay a daily payment, plus you have to pay a percentage on the back end. It's just a horrible deal. So it's just not the best type of funding. There's so many options out there. We're going to be going over all of those different things tonight. So be prepared. Another thing is, nothing comes easy. If it sounds too good to be true, it probably is. Okay. I'm one of those. I fell for it myself. I've spent thousands on some of these damn programs that were just a bunch of BS. But we live, we learn. And now I'm here to educate you guys and tell you, you don't really need a lot of these other programs. I have clients that I work with one-on-one, and they're constantly buying into new programs, buying into new people, looking for something. And I ask them, what are you looking for? Because you're looking for something, but you're not putting in any work. What the fuck are you looking for? And they're looking for this shiny magic coin, this fool's gold that doesn't exist. They're looking at the pot of gold, but they're not putting any work. They're so busy spinning their wheels, trying to find the easy way out. They're not doing shit to further their business. So that's very important for you guys to understand. You have to put in the work first. You can't just expect to start a business and not put in any work, sweat, blood, or tears. Okay. It doesn't work like that. If it was so easy to run a business and just hire a VA to do everything for you, then all of us would just be millionaires very easily. So obviously, it's not that easy. We have to put in the work. We have to understand our processes first. We have to put in together a standard operating procedure, and then we can hire other people to do the job and just duplicate the easy tasks that we can assign to other people. So we have to be dedicated. We have to be organized. Okay. One of the biggest questions that people ask me is, do you need business credit in order to get access to funding? No, you absolutely do not need business credit in order to get business funding. And I know that might sound odd. Well, what do you need, right? Well, most of the time, In this day and age that we live in, it's going to be a personal guarantee, which is a PG. Basically, you're using your personal credit. Most of the banks out there are going to require one of these three C's. We got three C's when it comes to business funding. The first C is cash flow. Okay. I saw a gentleman today flash and I see this all the time with influencers, and I just chuckle to myself because these influencers, they have good cash flow, they make a lot of money, right? So yeah, it's not surprising that some of them would get a $250,000 line of credit. Or one of these guys today that I saw, he had an $800,000 line of credit to buy a home. Of course, you can get an $800,000 line of credit buying a home with your cash flow and your income and your credit. But that is not going to apply to everybody. We all have to understand our business is in a different place than other people's. And you have to show the bank that you have consistent cash flow if you want them to take you serious. Okay. It doesn't need to be anything crazy. Most banks like to see consistency. They like to see daily deposits. They like to see, consistent deposits. And they like to see upwards of at least $10,000 a month being deposited into your business bank accounts. Okay. I talked to a gentleman not too long ago. He said he wanted to build business credit. He had a business. Everything was sounding great until he told me he did not have a business bank account. He made all of his deposits to his personal account. And I was like, why would you do that? You must have a business bank account, guys. If you have a business, you have to have a business bank account. Okay. Please don't make that mistake and intertwine the two. All right. Second C that you're going to need when it comes to funding is credit. Okay. I call this credit flow, cash flow and credit flow. They go hand in hand because both of those can be used to get you funding. If you're not heavy on the credit, you got to be heavy on the cash flow. If you're not heavy on the cash flow, you got to be heavy on the credit. Something's got to give to the bank for the bank to feel comfortable lending to you. You have to put yourself in the bank's position. Would I feel comfortable lending to a person that has not shown the ability to pay their bills on time and I got to chase after them? Probably not, right? So it's really important for us to understand how we can show the banks without the banks understanding we know what the hell's going on, because the banks don't like it when we know what the hell's going on. So we have to be smarter than the banks. We have to set ourselves up first. So you can have personal credit, you can have business credit, right? Personal credit is going to be stronger sometimes than business credit when it comes to business credit cards and business lines of credit. I'm just going to be honest with you. All right. So those are ways that we can get funding even as a brand new business. All right. And then there's personal credit only, which are very common for business credit cards and business lines of credit. Oftentimes, they're just pulling your personal credit. For example, I just applied with US Bank for a business credit card. They pulled me on TransUnion. They didn't look at anything else. They approved me based on my personal credit for a business credit card that has 18 months of no interest and does not report to my personal credit. Because at this point, I'm kind of maxed out on my personal side, so I don't need any more personal credit cards. The third C that banks look for is collateral. Okay. What do you owe? What do you own that we can take as collateral to feel comfortable in this transaction? This is really common for like SBA loans and SBA 7A loans, which is the Small Business Administration government-backed business loans to help you build, grow, and scale your business. Some of the best business loans that you can get. They like to see collateral. Okay. Now, if you don't have collateral, you can use cash flow and credit. If you don't have cash flow, you're just going to need credit. You can get away with just credit. If it's just collateral, you're going to need something plus collateral. So you're going to need collateral plus cash flow or credit flow. Okay. But all in all, personal credit is going to be your foundation. It took me 4 years to build up my personal credit. Okay. This is my credit score right now, one of my credit scores right now, the highest one that I have. I recently took a dip because a fucking collection reported to my credit. It dropped my credit score 78 points. I swear to God, it just happened, right? I got it off like within 2 weeks. I was like, oh, they got the right one. It was LVNV funding. I was like, oh, cool. Yeah, I'm gonna take care of you guys. So got that off. My credit was higher than this, but it dropped me to like a 700. And as soon as it came off, it gave me 78 points back. Didn't get all my points, but I got enough of them. So, but it took 4 years to build it that way because it's very easy to get someone into the 700 credits. Very, very easy. I've done it thousands of times, right? But there is a huge difference between a 700 credit score and an 800 credit score. And the difference is time. And that's not something that anyone can buy. It's simply your payment history as a consumer showing your ability to repay back debt as agreed. No late payments, no signs of financial stress, no signs of financial risk. Okay. When you get to the 700s, there's not a trade line, there's nothing that can get you to the 800s except for time. And it's going to take you 24 to 48 months to get to an 800 credit. Why? Because that's the sequence that they like to see as far as the payment history goes. And that's why it's so important for you guys to understand. We want trade lines that are going to last. So when we do pledge loans or secured loans to build our personal credit, which you can also do secured loans on the business side as well, guys. So that's another way that you can start building some relationships with the bank on the business side. Just how you can do a secured loan on the personal side, you can do secured loans on the business side as well. But if your credit isn't in the best place, it's a great to start building that relationship with those secured loans with the banks while you get everything intact, right? So basically, that's the difference between a 700 and an 800. I've seen so many people get to 700 and not be able to stay there because they make bad financial decisions. They take on too much debt. They take on funding that they're not able to maintain, like these daily payments or weekly payments. We want to try to stay away from that. If you have a funding deal where they're going to require a daily or a weekly payment, you need to think long and hard before you accept it because chances are it's not a good funding program. Now, like I said before, anyone can get a 700, but can you keep a 700? It's extremely hard to do if you are not educated about it because at this point, what we have to do is we have to erase everything we once thought we knew about credit and we have to retrain our brain to think, okay, this is what I have to do moving forward because it wasn't working out before. Same thing with me. Back when I always had decent credit. I always got approved for things, so it was never a problem. But looking back at it, my credit score was never above 700. It was always in that high 600 range where just enough for me to get approved and for them to charge me a nice interest and to keep me down, but I wasn't educated. I would take out furniture credit cards and max them out buying furniture. Now, I would never take out a furniture credit card. Instead, I would take out a furniture installment loan because that installment loan is going to allow me to make payments every single month, same as a credit card, but that credit card is going to affect my credit card utilization, which I had no clue about before, right? So it's all about being educated, starting to readjust how we operate, making sure we have auto pay set up so we never, ever, ever make a late payment. Okay. I cannot stress this enough. I might say this on every call, but late payments are the fastest way to lose 100 points on your credit, and they will affect you for 7 years. So we got to make sure that we have auto pay set up for at least the minimum amount due, and then you can always pay more towards your cards. That's exactly what I do. I try to make weekly payments to all of my credit cards or frequent payments. I'm always paying my cards, multiple times a month, right? That's probably another reason that I have such a good credit score because I'm constantly making payments to my credit cards, right? and they feel comfortable. And that's why I have big limits with them as well, because you got to spend if you want to get big limits. Now, you always want to make sure that you stay below that 10% credit utilization, especially when you are going after funding. When you are going after funding, you have to make sure that your credit report is fully optimized so you get approved, and everything has had the opportunity to update on your credit reports. I've had a lot of people that were like, "Oh yeah, well, yeah, I paid that card down, so it's good, and I know it's good." Well, I know you paid it down, but the credit bureaus don't know you paid it down. So you have to wait until it updates with them as well, which can take 30 days, depending on when they report that data to the credit bureau. So we have to make sure that we are patient and we are doing things very strategically, because it is very easy to mess up with credit. You have to walk a very fine line, and I'll be the first one to tell you, when I first started building credit with some of these like secure credit cards, I had got a late payment on one of them because they misapplied my payment. I ended up getting corrected, but it was just a horrible hit to my credit. So again, late payments are the hardest thing to get repaired. Even though Marlon shared his win today and he got a late payment corrected with American Express, if you are going to go through the process of getting the late payment, asking for forgiveness or asking the bank to update the late payment to paid as agreed, it's best to only ask when you have one late payment, because they're more likely to forgive one off-site payment versus a track record of having multiple payments month after month after month, right? This is what your personal credit data points really need to look like, right? Now, the derogatory marks, those are going to fall under your payment history, because whenever you have charge-offs or collections, basically that means that you didn't pay your bill, right? So you'll notice that when your credit score is broken down, it's actually broken down into 5 sections. These are the data points. Payment history, you got to pay your bills on time, no matter what. The samples here to the right, this is actually my credit profile data points based on the 800 credit score that you just saw. You can see here I have 0 late payments because this is the highest factor with your personal credit and business credit. So it's really important to show your ability to pay back debt as agreed. My personal debt is about 7%. I keep it under 10% at all times, meaning this is your credit cards and your lines of credit. This does not factor any other installment loans. It's just the revolving lines of credit. A lot of people don't understand that part. So we want to keep that down. That's why it's good to have high limits, because if you go and need a couple thousand off your personal credit cards, it's no big deal. Like for example, I've maxed out with Navy Federal at 80K. Now that's helped me get high limits with Chase. It's helped me get high limits with US Bank and all these other places, because I structured my personal credit profile correctly and I took the time to do it right. All right. Now, derogatory marks, that's collections and charge-offs. Collections are usually with some sort of third party. It also could be a service provider that is collecting on behalf of the creditor. We talked about that a lot early on in the credit community. But basically, want to clear all those up. So if you have any collections or derogatories, it's always going to boost your points up the most if you can get those corrected and deleted. 15% of your credit score is history. So you can see on mine, I'm a little over 5 years. I've bought in trade lines to help boost up that number. The more history a trade line has, the more impact it's going to have to your credit score, unless your utilization is out of whack and you need to add high limits to offset that. That can help as well. But generally speaking, you're going to get anywhere between 2 to 5 points per year that a trade line is open. So a few years ago, I added a trade line and it was around 4.5 years and it gave me about 30 points. And then I added added it to my partner's profile as well, and it gave him about 45 points. So it's kind of, an average of, a 4-year trade line. If you're going to get 10 years, it's probably going to give you about 80 points. So, it depends on all the data points. There's no set number that a trade line can guarantee somebody. And that's why I always like to talk to people before they buy trade lines, because there's a lot of different factors with trade lines. For example, I had just sold this lady trade lines. She was just desperate for funding, and she's like, I want to use my daughter, so I'm going to buy 2 trade lines for my daughter. Well, she did. They reported, and then it was kind of my fault because I didn't ask. I guess I didn't ask enough questions, but she was the one that told me. The funding company said that I can get 3 times whatever our highest credit limit is. And I was like, well, usually AUs don't count. Oh, well, they said we can use them. I should have known better, right? But I'm going off what she says because she doesn't know. The funding company is probably going to just tell you whatever. Well, anyway, she gets the AUs, and the funding company can't use the AUs on her daughter's profile. And her daughter's only 19 years old, which I guess I didn't look at her daughter's birthday. I didn't realize she was so young, but it's very hard to get someone who's under 21 funding. So I feel bad, but that's prime example of having to talk to someone before they place an order for trade lines. And we're going to talk about starting a trade line business and how you can start your trade line business next month, because I'm going to tell you something right now. My trade line business makes me probably about $5,000 to $7,000 a month just off selling trade lines. And they're the easiest thing. I love it so much because it's so easy. You just have to make sure that everything goes, as planned. Sometimes trade lines don't post and you got to apply for a replacement, but just make sure that your client gets what they paid for and you'll be good to go. So last thing here is the amount of new credit, which is the hard inquiries, right? So you don't want to have more than 4. And you can see here, my latest one was about 4 months ago because I got, let's see, that was from USAA on the personal side. And then credit mix, that's also 10%. This is a nice mixture of installment accounts and revolving accounts. Revolving accounts are credit cards and lines of credit. Installments, auto loans, mortgages, student loans, same payment amount every single month. You got to have both of those. 2 to 4 installment loans, 6 to 10 credit cards, because you want to have a nice beefy profile. Once you get to 10 credit cards, you can probably get anywhere from between 10 and 20 credit cards on your personal credit profile. I wouldn't go past 20 personal credit cards because it's just not necessary. You can go over to the business side and do a lot better and be able to actually use them without affecting your personal credit. But you don't want to close any of your credit cards. So if you have credit cards that are open that you're like, hey, I hate this card, I'm never going to use it, fuck these people, I don't want it, I'm going to close it. Don't close it. Just use them like they were using you. Keep it open. Let that keep reporting to your credit. Funny story is a girl that I was helping when I first started, she was like, oh, I need help to get approved for an apartment. So I was like, okay, cool. Like, sign up for these credit reports. I'll take a look at your credit. So I was looking at her credit and I pulled her credit. She had like a 700 credit score. I said, what exactly do you need help with? She's like, well, I don't have any credit. And I said, well, right here it says you have a Wells Fargo credit card. And she was like, oh my God, that is an old credit card and I lost it and I just forgot to close it. And I'm like, well, it's a good thing you didn't close it because that's what's been holding you with this 700 credit score for so many years. She literally forgot about this card, didn't even realize it was open. And all of these years, it had just been helping her build credit. So ultimately, she really didn't need help, but just understanding her credit reports. So that's why it's important just to keep those accounts open, because even if you don't owe them anything, they're still going to report an on-time payment being made. And that's super important because it shows history, and that's what we need. So just put it away. Don't use it. You can also call the banks and ask them to credit any sort of annual fee or monthly fees or any fees that you might have with the card. ask the bank if they can provide you with the credit because you were thinking about canceling, because they don't want you to cancel. So act like you're going to cancel. Say, I want to cancel. It's too expensive. See what they can offer you. Ultimately, you'll say, I'll think about it and call you back, right? Hopefully they can just credit your account for something. Here's some more personal data points, because when it comes to business credit, you can get approximately 4 to 5 times what your strongest credit card is. So if you have a $10,000 credit card on your personal credit, that means you can probably get anywhere from like $30,000 to $60,000 on the business side. And that's why it's important to build up your personal credit really strong, so that way you can get even better business credit with your different companies. So you want to have at least a 700 credit score. Now, if we were having this conversation 2 years ago or even last year, I probably would have told you a 680 would fly. But it is 2024, and the banks are taking some huge financial losses due to all the bullshit with COVID and recovering, and all the people that have been applying for business credit cards that don't even really have a business and then don't pay it back. So they're getting smarter, and you absolutely have to have some sort of business in order to pay this back, or have to have some sort of income in order to pay this back, because it will just end up ruining your credit and you're not going to get to the next round. You're going to need at least $2,000 credit lines on your personal credit, meaning you need to have a credit card that has at least a $2,000 credit limit. Hopefully more, right? We want to get it to 10. We really do. And how you do that is ask for the credit line increases. Sometimes it can be challenging when they're secured, not much we can do there, right? But if it's unsecured, constantly be using it, paying it, using it, paying it, using it, paying it. And then what you can do, what I did with Capital One, because they just refused to give me a credit line increase, I went and swiped my card for something that was like a few $100s, like $500 over my credit limit. And they called me instantly. Were like, hey, are you trying to make a purchase? And I was like, yeah, but I don't have enough credit on my card and it's at a zero balance. It's just my credit limits are so low and I'm trying to buy this furniture. And they're like, oh, well, we can go ahead and extend it. So they gave me a credit extension for that. And then I never bought it. Right. So you can do that too. They'll trigger you to call. You can ask for the credit line increases through the app. Generally, that's no hard credit pull to you. Sometimes it can be still, but that's why you want to try to do it through the app if possible. You want to have at least 3 or more credit cards with actual banks. Okay. I'm not talking about Chime. I'm not talking about Self or none of those other shitty ass credit cards that you can get to build credit. We here in the credit community need to build credit with real banks, real financial institutions. Okay. Anyone can go build credit with these shitty companies, right? But it speaks volumes to other banks when you have a secured credit card or a credit card with Bank of America versus Self, right? Or versus Chime. We want to have grade A bank trade lines on our personal credit if we want the banks to take us serious, okay? Want to have our history at least 3 years. I have seen banks that will approve some people at 12 months. So I have heard of that, but usually banks want to see at least 2 years. Okay, that's pretty much the standard. They want to see a 2-year history as far as you being able to pay on time. They like to see businesses that have been opened for 2 years. So we'll get to, well, that's a different topic. But as far as the data points, they want to see that you've been able to pay your bills on time for at least 3 years. Now, for the credit card utilization, I always recommend you keep it under 10%. But if you are in a bind and it's a little bit higher, we can go up to 25%, but we don't want to have it past 30%. I know I probably told you guys this story before, but I let my credit utilization get up to like 27 or 28% just to kind of test it out one time. And it dropped my credit score like 60 points. So it was just not a good thing. And I was wanting to move at that time, and it just was like a huge hit. So not helpful at all. No charge-offs, no collections, less than 4 inquiries in the last 12 months, no late payments in the last 24 months. understand if you have a late payment on your credit report, you're waving a red flag at these banks. You are saying, hey, I'm not responsible. I don't pay my bills on time. So they're not going to mess with you. You have to pay every credit account on time. Things that don't report to your credit, who cares? PG&E, well, I live in California, so that's our gas and electric. They don't need to be paid on time. You can make arrangements with those people. You can make arrangements with cell phone companies. You can make arrangements with water and garbage and sewer and all of these utility bills. But if a bill reports to your credit, you need to make sure that you pay at least the minimum due by that due date. You will have an additional 30 days to make your payment on the personal side, but you will get a late fee, which can be hefty. A lot of times after you pay it, you can ask them to waive the late fee, or if you're ready to pay, ask them to waive the late fee. But we don't even want to let it get to that point. We want to get into the habit of paying on time, because that generates good financial habits, right? We're not overspending. We can afford to pay our bills. And, sometimes if you take on too much, people crash. So don't take on too many new accounts too quickly, because you want to be able to stay organized. Like I did, I took on way too many too fast. I opened like 4 or 5 secured credit cards, and two of them happened to be with like the same bank, with like First Progress or one of those crappy companies. So it just wasn't good, right? So be organized, do it strategically, go with banks that are actually real financial institutions. Don't use these like crappy, secured cards. You can totally build a relationship with a bank and get a secure card with them, like Bank of America, Truist, Navy Fed. There's so many options. We're going to be going over a ton of banks in this presentation. Now, I did a video, I don't know, a week or so ago, and a lot of people had questions for me, and I wanted to make sure that you guys were aware of what NACA is. Nothing to do with business credit, but I was just thinking about it when I was doing the slideshow. So I want to make sure that you guys are aware of this program, because this program will allow you to buy a home. Okay. NACA is in a number of different territories, and you can go through their home ownership program. You have to take some classes, but a lot of them can be done online. And, it can take some time to go through their program, but the great thing is they don't necessarily have a credit score requirement, nor do they have necessarily like an income requirement. As long as you've been at your job for 2 years, you have 2 years of tax returns. On their website, they prefer to help people that have an income of at least 30,000 to I think 50,000. But again, it varies based on the state, because they're in a number of different states. But if you are looking to buy a home and you are not able to qualify for traditional, FHA or any of these home buyer programs, this is a home buyer program that will actually help you through the entire process. They will help you with down payment assistance. There are so many different ways that this program can help you buy a home. So please check it out. We have to be buying properties and collecting assets so that way we can have collateral. Okay. Not only that, but we can build wealth by owning property. This is the NACA program, NACA.com, no down payment, no closing costs, no hidden fees. And the biggest part about it, there's no mortgage insurance. Okay. People don't realize when they go to these little mortgage companies, they have what's called PMI. It's called private mortgage insurance. That's a whole bill itself. Okay. So that PMI bill could be anywhere from $300 to $700, depending on what your mortgage is, right? That you're saving a ton of money with NACA here. And they have the lowest interest rates. As of June 12th, 2024, a 30-year fixed rate is at 6%, 20-year 5.5, 15 5.75. That's still pretty good right now. That's a fixed rate. So that's Not to say that you can't refinance it in the future if you find a better rate, but that's going to be their fixed rate to you for the next 30 years. So if the average mortgage interest rate goes up to 10%, you're at a fixed rate of 6%. If it drops down to 2%, you can probably refinance as long as you have decent credit. So that's the great thing about these fixed interest rate programs, because before, when I owned a home, I was on basically like not a fixed rate. So my interest rate would go up and down. And I actually qualified for a home program through the Obama Home Affordability Program because I bought my house in 2007. And we all know what happened in 2008. There was a huge housing market crash. I was instantly $100,000 underwater with my house. And I was scared. I was like, oh my God, I'm going to lose my house. But thank God I had a good job. I made good money. I just paid my payment. I was like, I'm not even going to think about it. I'm just going to pay my payment. And then Obama came out with this home affordability program. I had to apply a fucking like 4 times, guys. So when I tell you you have to be persistent and consistent with credit, that goes along with everything from mortgages to these mortgage programs to all of these type of programs. You might get told no multiple times before you get told yes, but don't let that knock you down, because sometimes you have to just be consistent. Okay, if that's not going to work, I'm just going to keep on applying. And maybe it's not with the same company, but maybe I need some clarity on why I got declined so I can reapply and make sure that I'm approved. And it's extremely important for you just to have patience and understand, just because you're told no initially doesn't mean it's never going to happen. It just means not right now, because there's something ain't vibing right. All right. So we can work on those things. AU trade lines. I kind of talked about this a little bit. Authorized user trade lines. Basically, they only exist on the personal side, right? I'm in this group. I don't know where it's social media platform. I forgot, but I think it was like maybe Instagram or something. I don't know. But I saw this person come into the group and advertise business credit cards and said, hey, I've got AU slots available. I can add people to my credit card. Right? That's the biggest scam ever. Because if I were to pay this guy to add me to his business credit cards as an authorized user, it would have absolutely zero effect on me and be a complete waste of money, because they have no bearing, none whatsoever. That just means that, if they give you a card to that account, you can spend on it, but it doesn't report to your personal credit on the business side. It doesn't report to the business side. So it's a complete waste. The only time authorized user accounts actually help is when they are on the personal side. So if your mom, grandma, aunt, uncle, whomever, sister, brother have a credit card, they can add you as an authorized user and you can inherit that trade line onto your credit report. I do this with my clients all the time. So when I teach you guys how to do a trade line business, you're going to understand this, because it can help people. I had a trade line. Actually, I had a couple trade lines with Capital One, and I got them shut down because, again, we're going to learn about that. But you got to know how to operate with these banks. You have to collect front and back of the driver's license, front and back of the social security card. So if you get audited, you can provide that to Capital One. I didn't have all that, so both my accounts got shut down. But anyways, I was using my credit cards and I would add my clients as an authorized user, because with Capital One, you can add up to 10 authorized users per account. So I would just add my clients and be like, hey, I can add you for like an extra $100 a month or something like that. Or some people I would just help out because I wanted to give them a good boost. And it would give them 50, 100 points, because these are people that have nothing on their credit. This is a positive trade line. It was only open like a year, and then it would get, older, but even a year can help somebody. So AU trade lines are a great way to make business money and to raise your credit scores. Like I said, on the business side, there's no such thing as AU trade lines. It's just trade lines, which are just either a vendor account or a financial services account. Okay. So I don't want you guys to fall for that shit, because a lot of people try to sell people. They're like, oh yeah, I'll add you, but it doesn't, not going to do anything, not going to do a damn thing. Before you apply for anything, you must look at your credit report. You must understand what the data is, because I always recommend have multiple sources. I have a lot of clients that use, Identity IQ, Smart Credit, My Score IQ, but then we also have a backup where we use something else, Experian, My FICO, whatever, right? Because oftentimes it can be very different. I just had a client I spoke to this week, and he's actually a part of this group. I don't think he's on the call today, but for whatever reason, when I repolled his credit reports with Identity IQ, it had all these inquiries that we had already gotten deleted. In fact, there were a couple from like 2022, and I was like, that's weird. That's so weird. So we have My FICO to back it up. They're not on the My FICO report. So sometimes you have to compare the data with other resources just to make sure that we're all on the same page. For him, I think it's more or less like him and his father have the same name. One's a junior, one's a senior. So he was saying that in the past, their profiles have been mixed. And I think that's what it's boiling down to, because it's just too weird, right? So always make sure that it is correct. You can look at Credit Karma, you can look at, Experian, you can even get the free credit scores with myfreecreditreports.com. Just get multiple sources so you understand the data that's on the reports, and make sure you have the most accurate data. And if you're waiting for something to update, it's not time to apply for anything. Okay. We also want to make sure that we don't have any fraud alerts on our credit report. Okay. A lot of people misunderstand what a fraud alert is, and they don't understand what a fraud alert is. All that a fraud alert is a consumer statement that's listed on your credit report. And under the consumer statement area, it can say anything, right? But most of the time, if you've been a victim of fraud, you don't tell the credit bureau to put these fraud alerts on your credit report. They will automatically do them. And they will say something to the effect of victim of fraud. Please call to confirm before applying or before approving any credit. And then there'll be a phone number that the bank will have to call. Okay. We want to make sure that those are off, because there is no purpose of having those. And actually, those can get you declined. In fact, they did get my client declined from Chase. I actually had him call into the reconsideration line, and he was actually approved for personal and business. But at first, it was a no-go because of those fraud alerts that were on his credit report. You also want to remove all consumer statements. Fraud alerts are going to be under your consumer statements, but there can also be other verbiage under there that's just not necessary. I don't care if you have been mixed up with your father, if you have been a victim of identity theft. Banks don't care about none of that. We don't care about none of that. Nobody cares about none of that. So it's no point in putting that shit on your credit report, because it's just another reason for them to potentially decline you. Less is better. If you are worried about somebody using it, or to the fact where you have to put something like that onto your credit reports, just lock your credit reports, and then you can unlock them when you are going to apply for something, but don't have a consumer statement on there. Okay. Also, if you do have your credit reports locked, you have to unlock them. Okay. Especially if the bank is known to pull multiple credit bureaus like Navy Federal. They pull TransUnion on the personal side. They use Experian on the business side. Well, apparently my client did not understand that they pulled Experian on the business side, even though I know I told him. He was shocked when that happened, and wasn't expecting it for whatever reason. But nonetheless, we have to make sure that the credit reports are unlocked, unfrozen. They have full access to them. They're not going to have any issues verifying you. Okay. Another thing to consider here is if you have recently moved, you need to make sure your addresses are updated. Oftentimes, when I get this, Equifax will completely lock your credit report as if you do not exist. And it'll just be like nothing when we try to pull it from Identity IQ, Smart Credit, My Score, anywhere, right? You have to make sure that there's nothing you can do over the phone. They're going to act like nothing is wrong. The only thing that you have to do to get this corrected when they lock your profile, it's because they can't verify who you are and you have a new address. So you have to send them a copy of your driver's license, preferably with your new address. But if you don't have the new address on your driver's license, you can either send them a passport, and then 2 forms of proof of address. So it can be a pay stub, a tax bill, utility bill, any sort of official bank statement, insurance statement, registration, car registration, something like that that has your current and accurate address on it. So that way they can update your credit. And you can also send them a copy of your social security card. Sometimes they might require that, especially if they can't verify who you are. So they locked your profile. And that happens a lot to people, especially when, they are starting to dispute things and all of a sudden they have a new address that's not listed on their credit report. So always make sure that those are adding up. Let's talk about the top credit unions and regional banks that you guys should be aware of, because before I learned about credit and the opportunity that is out there, I have never heard of most of these banks. In fact, the only banks that I really knew of are my top national banks because I see them on every damn street corner. So, of course, I just had Bank of America and Chase and all those national banks, which is not a bad thing by any means, but there's a lot more opportunity out there. We've got First National Bank of Omaha, which is FNBO. We've got First Tech. We've got Fulton Bank. They offer a lot of no doc loans, and low doc meaning no documents, no financial records, or if low doc, it's very low documents, and low doc doesn't necessarily mean financial records. It could just mean they need something from the business. It could be a letter from the IRS with your EIN number on it, right? Doesn't necessarily mean it has to be a financial record. There's KeyBank, PNC. There's PenFed. Now, PenFed is only for the personal side. They don't really have a good business. They don't have a business side. So PenFed is great on the personal side, and you can get in with a lot of the certifications that we've talked about prior. We're going to go over some of those in the future here today. Navy Federal, that's a good one. Truist, DCU, PSECU, Pennsylvania State Employees Credit Union, M&T, and then TD Bank. Now, these are not going to be available in every territory out there. So I tried to pick some of the top ones that most people can get into. A way around the geo-restricted, meaning if a bank is geo-restricted, that means if you are not in that geographic area, a certain amount of miles from a branch, you wouldn't qualify, right? So how do you qualify? Well, you need to find an address within a certain amount of miles of a branch, or have an address that is in that state. I was talking to one of my clients that's in California, and we were talking about Truist, and he was like, you know what? I actually have family. I forgot what state it was, but he has family in a state where Truist is at. So he's going to get his family's address and use that, and he can open up a Truist account. So there's always workarounds. Sometimes we just have to get a little creative, right? Now, according to iBankNet, and I'm going to give you all these websites where I found all this data, these are the top 40 banks. And that's not just because I feel like they're the top 40 banks. It's based on the amount of assets and deposits that they have. And that's important. Why? Because the more money that a bank has, the more they're able to lend to you. If you have not peeped game about Chase, in the last 2 years, Chase has literally opened up the funding gates for everybody to come get credit cards from them. Okay. And look at this. They are the #1 bank. Okay. They used to be named JP Morgan. Now they're going by Chase Bank. they actually just updated my credit cards on my credit report as well to reflect Chase Bank. And this is kind of, I think, going through the rebrand process with them. So you guys need to get in while the getting is good with Chase, because even myself, I've had bad blood with Chase. They were one of the ones that I paid and I settled with them because I said, you know what? I value my relationship with you guys. I went through a fucked up time in my life. I want to do right and I want to pay you back. I did a payment plan with them. I fulfilled my payment plan and I got it off my credit report. But of course, they still had my internal records, right? I applied a few times and was declined, and I gave up for many years. And then finally, it took me about 4 years to get back into their good grace and get credit cards with them. And I got, I think my personal one's like 17,000 on the personal side, 17 something on the personal side. And then on the business side was 22. Average on the business side is 22. Mind you, I had no business credit. I had no business address. I used my home address, no online presence. Literally a business I started as a shelf corp and I just let it age for 2 years and then I applied for Chase. Just used my personal credit. Okay. Even used the home address, got approved 22K. So no excuses. All right. You don't necessarily need to have a business address. You can use your home address, but if you're going to list yourself online, I don't recommend it. But nonetheless, Bank of America is number 2, Wells Fargo, Citibank, US Bank, PNC, Goldman Sachs. Goldman Sachs, they underwrite for the Apple card, the Apple credit card, which is great, a great card. And they don't really give super high limits anymore, but I think that they are a great place to start off if you're building credit on the personal side. And then they also underwrite for the GM Financial card. And between the GM Financial card and the Apple card, my GM card is 8K and they've never given me a line increase, but whatever. And then my Apple card, I think is 11,000. So between with Goldman Sachs, I've got like 19,000, almost 20,000 that I was able to add to my available credit profile. I don't really use the cards too much, but these are great decoration pieces for my personal credit just to sit there and gain age with a decent limit. PNC's good on there. I think we went over that one. So Truist is actually number 8. Capital One's the only one I'm not a huge fan of because Capital One is like really not Capital One. Their real name is Capital One, but they just go by Capital One because of the fact that if you get business credit cards with them, they report to your personal credit. So it's totally crappy. And they pull all 3 credit bureaus when they run your credit. All of these other banks that we're looking at pull one bureau. Okay, one damn bureau. Capital One, for whatever reason, pulls all 3, and it's super frustrating. But we've got BMO, Harris. That's an up and coming bank. You can see they're number 14. Charles Schwab. That's another one. Get that Fidelity card if you don't have it, underwritten by Elon. We're going to be going over that tonight. So you guys can see all these banks. Of course, this is all going to be in the slideshow for you guys to go over as well. But these are the banks that you guys need to be going to. They got the money. They're lending it out, obviously, right? So this is where it's at in regards to banks, right? Then we got our credit unions, different from banks, okay? Navy Fed, number 1, state employees, 2, Penn Fed, 3, schools, Boeing, Golden One, that's out here in California. Alliant, America's First, a lot of good ones on this list here, okay? Digital Federal Credit Union, that's DCU. We've got Bethpage, San Diego Credit Union. They do a pledge loan too. They're a great credit union. So you've got a lot of options here. These are the credit unions that you need to be building a relationship with, especially if these credit unions are in your geographic location. Okay. If you have branches where you live of these banks, you need to go to them and build relationships with them. Okay. Building relationships with banking managers is super important, guys. We're going to get into that in a little bit later, but they're called RMs, relationship managers. You can develop relationships with relationship managers to help get your clients funding, refer more people, and it could be a game changer, right? This is how a lot of funding companies start up. Now, that's not my niche, but a lot of my clients do funding and they make really good money. They basically help people repair their credit, then they help them get funding from different banks and financial institutions. And then they charge a fee on the amount of funding that they get the client. So if, for example, if I was a funding company and I was charging someone 10%, if I were to get someone a $20,000 credit card, I would make $2,000 off of that. Now me, I don't feel right about that. And I could probably make a lot of money doing it, but it's just not something that I feel right about. I don't like my clients having a 10% balance due when they have not been able to use their credit card to do anything for their business except for pay for me. I don't feel right about that. So I would rather someone just pay for my time. I can give them the information and they can go apply because it's a much better situation for them. But some people pay 10% for them to get funding from people. Hey, whatever, right? But Navy Federal, this is kind of the blueprint for Navy Federal. Now, in order for you to get a business credit card with them, you have to have a personal account with them. In order for you to even apply for a credit card with them, you have to have an account with them. And that's kind of the same thing with all credit unions, right? You have to be a member if you want to apply for their credit products. I had a client that went to NASA and he's like, "Oh, I applied for their credit card and I got declined." And I'm like, "Well, are you a NASA member?" He's like, "No." I'm like, "Well, you can't apply for their credit cards unless you're a member, silly." So you have to understand when it comes to credit unions, you need to have a bank account with them in order to apply for their credit products, right? It's just kind of the rule of thumb, especially with Navy. You can't even apply for anything unless you're a member. And then in order to open up a business account, you actually have to have a personal account. On the personal side, though, Navy Federal is your gateway. Okay. This is your bank, your go to bank that's going to open up funding for you. Why? Because they give out high limits. Okay. Their maximum unsecured credit exposure limit for credit cards on the personal side is $80,000, guys. How do I know this? I tested the limits. I got that 80K from them. Absolutely. And guess what? I figured it out because I kept on raising my limits, raising my limits, raising my limits. Finally, I'm at like 38 and 40,000. I asked for another credit line increase. They approved it, right? I got the screenshot. And then when I went to go look at my accounts, it kept maxing them out at 80K. And I was like, man, it's an 80K max. And then I called them, asked, they said, absolutely, 80K is the maximum credit exposure on the personal side for credit cards. And you can get up to 3 credit cards. I have 3 credit cards with them, but I don't recommend someone getting 3 credit cards with them. Because I would much rather see someone build up their 2 credit limits to $40,000 each. Because guess what? My third card is only $1,500 and it sucks. I would just rather not have that card at all, to be honest with you. So that's why I say get 2 cards and build those 2 up to 40K a piece, because those are going to be your high limit trade lines that can help open up the doors with other banks and open up the doors on the business side, like way more than on the personal side. Now, before you apply for anything with Navy Federal, you want to open up, like I said, the bank account. Within the first 30 days, you can do the pledge loan, which is a secured product, and they don't pull your credit. But after you do the credit loan, the pledge loan, after 90 days, if you having your bank account with them, if your credit is at least a 680 on TransUnion, then you can go to their website and go through their pre-approval process, where it will be a soft pull and they'll tell you whether or not you have been accepted for any of the cards. If you have been accepted for any of the cards, I recommend that you start off with the green cash rewards card. Okay, it's the green credit card that they have. Usually it's a 25K approval right off the bat, right? I think they gave me 20,000 right off the bat. My first credit card with them was 500. That was the Amex card. Big mistake. That card does not give high limits. Do not apply for the Amex card. The only benefit that I ever got from that goddamn card was getting my name into the Amex system. That's what helped me get 5 Amex business credit cards. And we'll go over that a little bit later. But other than that, it's no low limits. Amex doesn't really give out high limits. Amex branded card. So it's a little bit different, but it still gets you into the Amex system. And all of my Amex cards say that I've been a member ever since I got that personal Navy Federal American Express card. Now, when you get your credit cards with Navy Federal, if for some reason you only get a secured credit card, do it. Okay. It's called the In Rewards card. You can do whatever you can comfortably afford. They will graduate you, meaning they will give you your deposit back and extend the credit line out after 6 to 12 months. It can take up to 12 months, especially if they don't know you and you're still building that relationship. That's why it's important to do that secured loan with them, which is the pledge loan, and get multiple banking products with them. You want to get checking account, savings account. On the third month with Navy Federal, you can get what's called overdraft protection. They call it like the OOPS. That's another banking product. So if you have a checking account, that's one. Savings account, that's two. Overdraft protection, that's three. Do a CD account, which is a certificate of deposit. Okay, certificate of deposits are super important. I stay having a certificate of deposit with the banks that I'm building a relationship with. USAA, when I first built my relationship with them, mind you, they just gave me 17,000 too on the personal side. Now, the reason is I did a certificate of deposit with them. And I think I did like 5,000. And mind you, some people are like, well, I don't have that. Well, do what you can, do what you can, because those certificate of deposits are very useful when it comes to building a relationship with the bank, because they can make a lot of money off even $1,000 from somebody. So that's what we don't realize, is something is better than nothing, especially when you're in that process of building that relationship. The great thing is that Navy Federal has pretty much any type of credit product that you want other than credit cards, right? But we're just kind of talking about credit cards here. If you need an auto loan, you can also go to them for an auto loan, and you don't have to do anything out of deposit or out of pocket if you want to buy. I'll kind of share my experience real fast buying a auto with Navy Federal. I went to the branch. I picked up a check. I just went up to the teller and was like, "Hi, I got approved for an auto loan. I'm here to pick up my check." She's like, "Oh yeah, sure, no problem. Just swipe your debit card." And she's like, "Okay, 1 second." She went and printed up my check right then and there, hot off the press. I took my check. It was a $30,000 check. I took my check over to CarMax, because CarMax accepts Navy Federal checks. Not all car dealerships do, just so you are clear on that, and they can waste your time. So beware. I took that check over to CarMax. I bought a Toyota Camry for Turo, and it was less than the $30,000 out the door. And I didn't have to pay anything out of pocket. They will write the check for up to 30K, whatever it is, right? So it's not going to cost you the whole 30K. You're only going to use what you spend. But as long as it's under what you got approved for with taxes, which taxes are about 10%, you walk away with nothing out of pocket. Okay. So it's a great way to get a car. And my credit score at that time, I think it was definitely over 700. But my first auto loan with them was a refinance. And I refinanced my auto from like a 20 something percent interest down to like a 4.89% interest. So that was great too. So if you need to get a better interest rate and your car is less than 4 years old, refi it with Navy Fed. If you need a new car, apply for their auto loan program. Mind you, I had two other auto loans on my personal credit when I applied for my third one with Navy Federal. They initially denied me because I asked for 60,000. I called the reconsideration. She told me, if you apply for a lower amount, we can probably approve you. And I said, well, how about 30? And she said, we can do 30. So I said, cool, let's do 30. So sometimes you just have to call and talk to them. Don't think it's always going to be a no, right? It might be no to 60,000. And thank God it was, because I didn't really need a $60,000 auto loan. Okay. A $400 payment was plenty enough for me. And that's usually what about a $30,000 auto would be, is going to be, pretty good interest rate. $30,000 auto loans usually going to be about $450 a month. That's where you want your auto loans to be, because that's doable, right? We don't want an unrealistic auto loan that we have to be committed to for the next 7 years that we can't afford to pay. I've been in that position. It's not fun. Okay. So again, if you want to ask for a credit line increase, say you got a credit card, they approve you off the bat for like 7,000. You're like, I wanted that 20. You get your 7, you spend, pay, spend, pay. Use your credit card like it is a debit card. Pay your whatever you spend, pay it back weekly, right? Spend, pay, spend, pay. Maybe do a little bit of manufacturer spending where you buy a bunch of stuff, go to Costco, do a big haul, maybe take some of the stuff back, return it to your debit card. Put some spend on there, right? Show them that you're able to spend big and pay big, right? And then ask for a credit line increase directly through the app. I would ask for $10,000. Now, usually everyone recommends 8,000, but I like to push the envelope a little bit. And I've asked for 10 and they've given it to me before. So I asked for 10 because they can always counter approve you and say, hey, we're not going to give you 10, but we'll give you 5. Well, I'll take that 5 and then I'm going to come back and I'm going to ask for another 10 in 90 days once I've shown you that I spend pay. Now, what I did to manufacture spend on my credit cards. And we talked about manufacturer spending in some of the other classes. So inside the school app, go to the classrooms, watch that video. But what I did was I would buy Simon Mall gift cards. And I forgot, I think they were $500 gift cards. And I had to register for an account with them, but they know people do this. You just have to be honest. They're going to ask you, you manufacture spending? You have to say yes, because I lied to them and I told them no. And they told me, if we catch you, we're going to shut down your account. So we don't care if you do it. We just want to know. And I'm like, well, why the hell you want to know? No, right? I didn't feel comfortable telling them, but they found out because they could see that I was purchasing money orders with the gift cards, right? So I would buy the gift cards. I would purchase like $10,000 with the gift cards. I would have my partner take the gift cards to Safeway. We have Safeway out here, but you can take it to anywhere that can do money orders. Usually it's like a Western Union. Sometimes you can get them done at your postal office if they have like some of the old school credit card swipers. And you basically buy gift cards you buy money orders with the gift cards. With the $500 gift cards, you buy a $500 or like 400 and whatever dollar gift card. Money order. God damn, I'm not good at that stuff. I would make someone else do it for me. So, and then you deposit the money orders into your bank account to pay back the credit card. But basically, what you're doing is churning your cards to show them that you can spend big and you can pay big. But guess what? I would never deposit those money orders into the same bank that I'm churning. Okay. That's where people F up. Okay. So if I'm churning a Navy Federal credit card, I'm not going to be able to deposit those money orders into my Navy Federal bank account. I'm going to need to go over to Bank of America or Chase or anybody else that I can go deposit these money orders with, and then take my Chase account and pay my Navy Federal credit card. Okay, with the same money. So you're just recycling the money. The great thing is you're still going to get rewards if your card has some sort of, introduction offer for if you spend 6,000 in the first 3 months, you get a bonus. You'll qualify for that. So that's kind of nice as well. So enough about Navy Federal. Capital One credit cards. It's important to know these data points, guys, because a lot of people talk about being able to get approved for multiple credit cards with multiple banks, but how do you know which cards to go after, right? And that was where I always fucked up because I was shooting in the dark. I'm the type of person, I'm a habitual line stepper. I want to figure this shit out myself, right? If you say one thing, I'm going to test it and see if it works. All right. That's how I am. And that's how I recommend you guys go about it too, because information is always changing. What might be valid today could possibly change tomorrow. I have no control over that. But this is all valid at the time of my research and my presentation here. So, Capital One, they limit you to just 2 credit cards. All right. So even if you are on your second card and you try to go for a third one, it's going to be a no. Okay. Unless it is a co-branded card like the Bass Pro Shop or, the Capital One Sparks Cash Plus card or some of those other co-branded Capital One cards. But if you are going directly through Capital One, you can only have 2 Capital Ones. So for me, I have, well, actually, they closed 2 of my accounts, which was kind of a blessing because they were only $500 and $600 limit. And they told me, oh, you can come back and apply again. So I came back and applied with them again. And I got the Saver card, which is like the bronze card. And it was like a $3,000 limit. Like, oh, hell with you guys. They don't give high limits. That's just Capital One for you. But needless to say, they're not my favorite. I don't like them. I don't recommend them. Their business credit cards suck because they report to the personal credit. They're going to pull all 3 credit bureaus. Navy Federal, I know I guys told you this, but just to reiterate, they pull 1 from TransUnion on the personal side. They pull Experian on the business side. Okay. Now they could also potentially pull Equifax, but it's very unlikely. When I first got my first auto, they pulled Equifax and TransUnion because I was a new member with them, and I think they didn't really have a good relationship with me at that time. But just be aware of that. Now, Capital One recently purchased Discover. That was back in February? So for $35 billion. So now Discover is owned by Capital One. So guess what? Discover's shitty too, right? A lot of people like Discover for the Discover It secured credit card. It's a good secured credit card because it graduates after about 7 months. But now that Capital One owns them, I don't know what the future holds for Discover. So they are now united and they are both shitty. They both give shitty credit cards, so I don't recommend them. All right. But if you are desperate for something, you can go and get approved there, no problem. But, at what cost, right? Discover Bank credit cards. Again, maximum you can have is 2. They are now owned by Capital One, so they're going to have a lot of the same rules moving forward. And generally, Discover is going to be pulling from Experian. They also have business credit cards, but again, they're going to report to the personal credit. Not worth it. Okay. If you are looking for a secured credit card, this is a good option because they have the Discover It card. And they have some decent cashback offers. But if I were you, I would simply just go to a credit union instead of this Discover or Capital One. US Bank, they even have a secured credit card. Okay. And US Bank is actually operated same ownership as Elon Financial. Okay. And we're going to go over what Elon Financial is if you guys haven't heard of it, but they're a very powerful player in this credit game. US Bank does not have a hard limit on the number of credit cards that you can hold with them, but rather they have a total maximum credit exposure. I have not been able to figure out exactly what that number is because with a lot of these banks, they're not going to exactly tell you because sometimes they're willing to make exceptions based on income and credit. Okay, that's what it all boils down to with them. They are not going to say, well, this is it, black and white. There's so much gray area with credit. You just never know until you run your app with the bank. And if it is a no, understand why it's a no so you can work on those things, right? If it is a no, call in and ask for the reconsideration line because it's some BS of why they, didn't approve you. Now, Bank of America, I'm sorry, not Bank of America, but US Bank, they have a lot of great welcome offers. They're known to give, 0% APR for 18 months, great business credit cards, good personal credit cards. So I would highly recommend that you get on with them. Like I said, they even have the secured credit card. So it's a win. And they are going to be TransUnion. So when they pulled my credit, they just used TransUnion. Now they also can use Experian as well. So they're either going to be Experian or TransUnion. There's one of those that could vary, just like with Navy Federal, they use, Experian on the business side. Well, US Bank, they use TransUnion on the business side. And a lot of times they use Experian on the personal side. So it can vary. Now with Wells Fargo, they are a little bit of like an old school bank, right? They're just an old ass bank and they're not my favorite, to be honest with you. But if you have an existing relationship with them, like you're like one of those people like I was, you have these banks that we see on every street corner. So you may have Wells Fargo for 15 years. Hell, leverage it, right? Because you have a relationship with them. Go get some credit cards with them. They actually just came back out with their business credit card and it has a welcome bonus right now. I believe it's 250. The welcome bonus is on the business side, so pretty good. They're gonna be an Experian bank, and they also have a business line of credit that's pretty darn good. Okay, so they like that banking relationship. If you guys understand these old school banks, that's what they like. They like to have people that have been with them for a long time and have at least a 700 credit score. Wells Fargo, 700 credit score. Bank of America, 700 credit score. A lot of the national banks are looking for 700. American Express, they're looking for 700. Credit unions, that's where we can get away with a lower credit score, like even at a 650 sometimes even lower. I've had people that I'm like, I don't know. And they're like, hey, I got approved for Davy Fed 25K. I'm like, God damn. Well, good for you. But those are people that had relationships with them and have multiple banking products with them. What people don't understand is we have what's called our credit reports, but guess what? The banks also have internal records, just like Navy Federal. They have what's called the internal scoring model. They're going to score you based on how many banking products that you have with them. So the more, the merrier, because they can trust you, right? Citibank, decent bank, pretty good cards. They have some good personal credit cards, some good intro offers. Um, they don't limit the amount of credit cards that you're allowed to have, but you do have that maximum exposure. With Citibank, I haven't seen anyone have over $100,000 with Citibank. So don't try. After you get to like 3 cards with them, you might have to close some other cards or have the credit limits lowered or something to that nature because they're gonna each of these banks have a maximum exposure amount that they're willing to go. And it's usually anywhere from 50 to 100K, right? 100K is on the higher side. Usually it's about 50, right? Because they don't want to do too much unsecured. They don't have any way to regain it, right? If something goes south. Separates the application rules by both business and personal credit cards. So you can only apply for one personal credit card every 8 days, no more than 2 credit cards in a 65-day window. Okay. You can apply for one business credit card every 95 days. And you don't want to make sure you want to make sure it's really longer than that. But these are kind of like the rules in regards to the application with Citi. They have a lot of good welcome bonuses, but again, if you have gotten any of these welcome bonuses in the past, it could make you ineligible. So you always want to make sure that if you've had these cards in the past and you have gotten the welcome bonuses in the past, you apply for the credit card that you can actually get a bonus with. So they can't say anything like, oh, you've already gotten this bonus from us like in the last 2 years, so you don't qualify. They've done that before for people and it's some BS, but it does happen. So all in all, good bank, primarily Equifax is going to be the primary credit bureau being pulled with Citibank. I have also seen them pull from Experian, so they're another one that could potentially use too. However, I just had a client that got Citibank credit card. I don't remember exactly which card he got approved for, but it was a Citibank card, and they in fact did pull his Equifax, and he was approved. So it's good. One of my favorite national banks is Chase. Now, Chase is a very, very unique character. Okay. You got to understand Chase. You got to understand all of these banks because you don't want to burn your bridges with them and you don't want them to say no. I think I applied with Chase like 3 different times, and they said no before I actually got approved. So the good thing is you can always apply later. You usually want to give it about a 90-day window, but they have what's called the 524 rule. And if you guys aren't familiar with what that means, is if you have opened up more than 5 new credit cards, okay? I'm not talking about car loans, I'm not talking about personal loans. I'm only talking about revolving credit cards, okay, or credit lines. The credit lines would account towards this as well. If you've opened up 5 new credit cards in the last 24 months, that will make you ineligible for Chase and they will decline you. They are also inquiry sensitive, so you should have less than 4 inquiries on your credit report. They are primarily pulling from Experian. However, based on your location, they could also pull from TransUnion or from Equifax, but primarily it's from Chase for the most part. If you are on the business side and you have a good relationship with Chase, you have good cash flow, they could overlook the 524 rule from you, right? But like I said, it doesn't count towards your business credit cards, won't count towards your 524 rule. These are only counted towards the personal credit cards that you have opened up in the last 24 months. All right. Now you will not approve you for more than 2 of their credit cards in a single month. So that was like my situation. I actually applied for the personal one first, and I'm like, oh shit, Chase is on a roll. Let's go. I'm gonna hit the business side too. So I got 17 on the personal side. And then I think a week later, I applied for the business side. I said, I'm gonna hit him while it's hot. And they gave me 22. So I did get 2 cards within a 30-day window. But when I tried to get a second business credit card, they declined me. So that is absolutely true, is you can only get 2 credit cards within like a 30-day period. And if I were you, I would try to get 2 on the business side because you're going to get much higher limits on the business side than you are on the personal side. But that's just how I would go about it if I could do it all over. Let's see what else is super important here. If you manage to get approved for 2 personal cards on the same day, Chase will combine the inquiries onto one. I don't necessarily think that that's true because I had a client that happened to, and it was 2 hard inquiries. So sometimes it will happen if you are working with a relationship manager, but if you're doing it online and you apply for 2 separate applications, it's going to be a hit each time with Chase. So if that's why I say it's so important for you guys to get into your local branch and build a relationship with the relationship manager there and just go in and say, hey, who's the relationship manager here? I want to sit down and talk to him. And go in, tell them a little bit about yourself. Don't mention you do anything related to credit or credit repair. You are a business consultant or you help with business operations, but this is what you want to do. You want to build a relationship with them so you can refer your clients to help them grow their business operations. Now, with Chase, you will need at least a 700 credit score. Again, I have seen people with lower get approved, but again, it all boils down to cash flow or income and or credit. So there's not going to be any one person that says, oh, well, I have a 690. Oh, you're automatically going to get denied because you have a 690 and not a 700. No, they might look at that and say, hey, they got a 690, but he has really good income. We don't want to pass up this deal. We're absolutely going to approve this person. So just make sure that you have some established credit on your profile before you apply. Because again, you want to have at least 2 other cards that show a 24-month payment history. So that way they don't look at you as if you are a risk. Barclays. You can get 1 credit card every day with Barclays. Would I do it with them? Probably not, because they are very inquiry sensitive and they do like a relationship with their clients. So, but they have some really good credit cards, and Barclays is generally a TransUnion bank, and they do not have a limit on the number of cards that they will approve you for, but rather, maximum credit exposure, which I have not seen over 100,000 with Barclays as well. I really haven't seen someone that has over 60,000 with Barclays that doesn't have a long existing relationship with them. So they're going to consider your overall credit profile, number of open accounts you have, just looking at everything to make sure that you're not a risk. But you can apply for multiple cards in one day. And like I said, well, it's unlikely that both will automatically be approved. Barclays will often combine those applications into one single hard inquiry, which is nice. And if you already have a credit card with Barclays and you want to go after another one, if you don't put spend on the first Barclays credit card, what makes you think that they're going to approve you for the second one? So you have to put spend on cards that you get that you're trying to build up with. So if you already have a Barclays, put a lot of spend on it, spend, pay, and get it down to 0 and then apply for another card. Barclays is kind of the same as Chase. They kind of stick to that 624 rule, but it's a soft rule. It can be overlooked if you have good income cash flow, right? The 624 rule is the same. If you've opened up 6 new credit cards in the last 24 months, they're going to look at you like you're credit seeking. Banks don't like credit seekers. So that's why we want to kind of go slowly. And if we are going to be doing a funding sequence, we want to do it all together so none of them can really see it, right? They do have a lot of good welcome bonuses because there's so many different Barclay credit cards out there, and you just have to figure out which one's going to be best for you if you like to travel or whatever the case may be. And if you happen to get declined, always call the reconsideration line. Okay. The only bank that I know of that the reconsideration line doesn't work is like Discover and PenFed. PenFed does not have a reconsideration line anymore. They just tell people to put in a new credit application. So I don't know. Sometimes they can be a bit challenging, but if you have an existing relationship and your Equifax has at least a 700, they're a good option. Because I had somebody that was in one of the programs that I was doing, and she actually got like $10,000 from PenFed just because she had a bank account with them, which is great. So let's talk about Bank of America credit cards. They have credit cards on the personal side and the business side. I really like Bank of America because they have that secured credit card on the personal side that pretty much anybody can get. I wouldn't bank on it graduating, so you can just know that it's probably going to be secured forever. I've literally known people that have had their secured credit card for like 5 years and still never graduated. So it's not one of those secured credit cards that is really going to graduate. If you want an unsecured credit card with them, you would just have to apply for another credit card with them. They do have multiple rules though. Okay. So they have the 2-3-4 rule, which 2 cards in any 2-month span, 3 cards in a 12-month span, 4 cards in a 24-month span. Okay. You can get up to 4 credit cards with Bank of America. But if you have opened up more than 7 new credit cards in the past 12 months, then chances are Bank of America is probably going to decline you unless you have a really established relationship with them. Okay. They also look at the 312 rule, where if you have opened up 3 new credit cards in the past 12 months and you don't have any sort of relationship with them or deposit account with them, chances are they're probably going to decline you. Okay. Because it's too risky for them. Bank of America can decline credit applications due to a lack of banking relationship. So I definitely recommend that if you want to get credit cards with them or products with them, open up a bank account. If you want to get an auto loan with them on the business side, open up a business bank account because they are definitely relationship based. And a lot of people that have like Merrill Lynch accounts, they're able to get good business credit cards or personal credit cards because of their relationship with the bank. Um, those who have a deposit account, if you have 6 new cards in the last 12 months, they could tolerate it because again, you have a relationship. But if you have 7 new cards in the past 12 months, chances are your application will get declined. But if you have over $250,000 with Bank of America, you could bypass the 12 or the 712 rule. So again, that's why they say it's not in stone, it's not in black and white that these are the rules, because any rule can be overlooked if someone has the right amount of money, right? That's how business is. It's business. We can't get mad at it, right? It's just business. They're a bank. They're all about business. It's all business. They're going to make money off all this, right? So for everyone else with no relationship, then I would say I would not apply for more than 2 new credit cards, or have applied for 2 new credit cards in the past 12 months. And if you have 3 new credit cards in the past 12 months, your application will probably be declined with Bank of America. If you would like to call Bank of America for the reconsideration line, I put the number down here for you guys. I always recommend calling into the reconsideration line with any of these banks, and you can always just Google the reconsideration line telephone number if the one on our presentation here is still not valid, because they do change often. Now, these are 20 tips. I'm not going to go over all of them, but these are all tips from Bank of America that you could really learn from, because they do have some good business credit cards. I've helped a lot of people get $15,000, $20,000 business credit cards with Bank of America. And honestly, if you're going to get credit cards with Bank of America, I would say get the business ones, because they are not going to report to your personal credit. As long as you have a good established relationship with them, decent credit, 700 on Experian, you're good to go. American Express. A lot of people don't understand American Express. I didn't necessarily either when I first started learning about them. But American Express is the leader of charge cards. Do you guys know what charge cards are? Does anyone here know what a charge card is? I'm going to wait. Somebody has to know. Let's see. Magic answer. Yes. Okay. What is it? Come on, unmute yourself. Tell me. I want to know what a charge card is.
Can you hear me?
I can hear you.
Yeah, charge cards is just when you purchase the purchase that you make within that 30 or 60-day period, you have to pay it back.
Absolutely. So same concept as like a net 30 account. You need to pay the account balance in full. In full. It's not a revolving line of credit where you can just make a minimum payment due. And that's where a lot of people get messed up, because they don't understand the terms of these cards. Okay. So American Express is the leader of charge cards. A lot of their cards have always been charge cards, but most recently they have started introducing their pay over time option, which, if your card does not have 0% interest for the first 18 months, I do not recommend, because their interest rates are 25%. So they are very, very high APR. So it's not something that's recommended. But the great thing about it is, if you have a lot of business expenses, you can rack up a ton of points and rewards. My favorite card is either going to be the platinum or the gold, depending on what type of business. If you travel a lot, I would go after the platinum. That's going to get you in access to all the Cetarian lounges inside of the airports. Any platinum card is going to get you access. The gold card does not get you access to the Citarian lounges. The platinum card, the annual fee is hefty, and we'll get into that. But the gold card I like because your top two highest qualified spending categories, which can be ads, which is a 4x points. So if you run any sort of Facebook ads, Instagram, Meta, any sort of ads, right? Any sort of advertisement, you can get 4 times the points on that. You can also get 4 times the points on another business category that would qualify. So if it's like travel or something like that, it's great to be able to earn points, but not the best option. Believe me, trust me. I messed up. I messed up listening to mentors and people with American Express, seeing all these big people on social media that were showing these huge numbers. Well, when you see those big numbers, just know that it's based on your spending trends. American Express is very, very, very smart. They have extensive AI and teams and people and research, and they track all this data. So they look at your spending trends. This is not a card that you want to manufacture spend with, by the way. Okay. But you can get a lot of different cards with them. You can get up to 5 consumer or business credit cards. Okay. Or no, I'm sorry, 4. You can get up to 4 consumer or business credit cards. Those are the pay over time options. So right now, I actually have 4 business credit cards. I have the American, I'm sorry, the American. I have the Business Cash. I have the Business Plus. Those are both 18-month 0 APR cards, and they have a 0% or 0 annual fee. So those are the 2 cards that I would get off the bat. And then I have the Plum card, which is a net 60 account. That's my charge card. And then I have the Gold card and I have the green card. The gold card and the green card both have the pay over time option, but the interest rate is so ridiculous. Like, I don't even really use them, to be honest with you. I use the gold card, but it's only for the ads because I get the 4x points on it. So you really have to have a purpose for these cards unless you have the 0% interest, right? Now, you can also get 10 charge cards with them. Okay, those are like net 30 accounts. Darwin, you got a question, my friend?
Yes, I do. The American Express charge card is only on the personal side or business side or both.
Oh, they're both, my friend, both. So they
Oh,
have personal side and they also have a business side. Funny thing is, I don't have any personal credit cards directly with American Express. I have the co-branded American Express card through Navy Federal, and now there's a co-branded card with Credit One that is American Express. So those get you into the American Express system, and then you'll start receiving notifications and invites from them. That's when you know it's time to go apply with them. Once you've gotten like that 5th invite from them, you want to go
okay.
on over there.
And then is it true that you only get one hard inquiry from them as long as you and the family they don't
Mm.
give you no more inquiry? Okay.
Yeah, yep, that is true. So
Okay.
when I went through my application process with American Express, now mind you, this was several years ago and things may have changed since then, but I'm just sharing my experience. I got 4 credit cards at one time using one hard inquiry. I was literally sitting at the gas station at the airport waiting for one of my Turo guests because their airplane had been delayed or whatnot, right? And I said, you know what? I'm going to apply for American Express right now and utilize this time wisely. I got approved for the first one. I was like, bam, let's go. And I was all on my mobile phone, right? So I said, fuck it. I'm just going to keep on applying until they tell me no. And I applied 4 different times. And the 5th one got declined. And I had to call them and verify that it was me applying, right? So I got proof for 4 credit cards that night. And then something came over me and I was like, I want that gold card. Like, fuck it. If I'm on a run with them and they're approving me, I want that damn gold card because I'm going to put all my ad spend on it. So a couple days later, and mind you, all 4 that I got approved for that night were one inquiry from Experian. Okay, so they just pulled Experian. So I got 4 cards with one pull. I got the plum, I got the green, and I got the 2 business plus and the cash. So I got those 4 that one night. Then a couple days later, I went back and like I felt like they were going to deny me if I applied through the app again. So if I would have applied through the app again, they probably could have just used that same poll, right? But I called in and I spoke with a rep, and it was a hard pull. It was an additional hard pull with the rep, and they still approved me for the gold card. But then I just ended up getting both of those inquiries deleted anyways, because those American Express business credit cards don't report to your personal credit, and they don't report to your business credit either. American Express is members of the SBFE, so they share data with SBFE, but they're not on your Experian, they're not on Duns, they're not on Equifax, they're really nowhere. They're kind of like hidden credit cards, which is nice, you know? Any other questions, my friend?
I have a question real quick.
Yeah, go ahead.
So what's the data points on American Express if you can pull multiple times or acquire multiple cars on the business side?
They want at least a 700 credit score with Experian. They want to see that you have, well, they want to see revenue, right? How do they see revenue? That number that you put on your application.
So stated income?
Yes, it's stated income. So when I got approved for my business gold card, I had a 700 credit score. Data points were, less than 10% on my credit utilization. I always keep it less than 10%. I was probably only about a year in on most of my credit cards. My business was a little older. Well, actually, it was probably about 2 years at that point because my daughter had turned 2 when we moved. So my business was a little older than 2 years. So they do want to see that they like businesses that have been in business for 2 years. Bank of America, they like 2-year businesses as well. American Express, they like 2-year businesses. Chase, yeah, you could go a little early. You could probably go at a year. But most of these bigger banks like businesses that have been around for at least 2 years, that have some good stated income. You don't want to put over 200,000 unless you can back it. However, I will say this, when I was on the phone with the representative with American Express, she didn't ask me what my revenue was. She said, "What is your projected revenue?" And I said, "Well, projected shit, I'm making 20K a week right now." And she said, "Well, that's $1 million a year." I said, "Well, shit, run it, lady." And she got me approved for like 20 something thousand on the gold card. So obviously that was due to the income, right? That number
Okay, so you
kind of high.
suggesting 150,000 a year to put on that stated
I would
income?
say more close to like a 180, and that can be for the revenue. Now, if they're asking what is your projected revenue is an estimate of what you expect to make based on your business plans.
That's what you exaggerate consistently.
Yes, 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 yes.
So what if I have a client that is not right at that 700, but they're at a 680, but they already have a relationship with American Express, say like a $5,000 personal credit card, being good relationship, good consistent, making payments on time. And
Mm-hmm.
currently, do you think that I should still suggest that she's apply because she needs business credit right now?
Um, anything that you can think of that you can do to give her a quick boost up to 700. If all her other data points are decent, what's holding her back from being over 700?
Just a utilization. I just got her to go more aggressively with her utilization, and that's why she's back at the
Okay.
680. I know that you mentioned authorized users a lot,
That
and
could help
you know with the
in this
system
situation.
they haven't been accepting the authorized users, but it does still increase the points. So I usually
Right,
just
right.
watch
That could be an exception in this case because we would just need to add more available credit to make her credit score go up because the banks wouldn't necessarily know what her credit score was prior to that, nor would they know when that trade line was even added. So they would just think, well, based on her data points now, they wouldn't necessarily look at the AU, but they would look at her profile, her relationship, and if her credit's over 700. When I first got approved for all those damn cards, I had applied multiple times before and my credit was under 700 and I was getting denied. And then when I got approved, they approved me at like a 704. Like I wish I would have kept I probably have the screenshot somewhere, but it was like literally like you were approved at 704 and I was like, "Wow." And they gave me 5 cards in like a couple days span. It was probably within like 3 days I had 5 cards.
and this is strictly business. You just kept the
Strictly
funds for the
business. It does
business.
not report to your personal credit. The great thing about the business cash card and the business plus card is those have a 0% um, APR. This is the comparison table. So if we're looking at the business blue cash card right here, it's got a 0 annual fee. And it's usually got an 18% or 18-month 0% intro offer. And right now there's actually like a statement of like $250 that you can potentially get if you spend 3,000 in the first 3 months. So that's decent. And then the Blue Business Plus credit card, which is also a 0 annual fee. This is another one that often offers the 18 month 0% APR. And right now they have, the earn 15,000 and get a couple things. But I like these 2 cards to start off with because there's no annual fee and usually they are 0% interest for the first 18 months, which is nice because even if they give you a few thousand, you could potentially transfer some of the personal debt over here if you needed to offset some things or whatnot.
Yes.
But you can see the other cards have a pretty hefty annual fee. Like that platinum is a 695, but if you use it right to travel with, if you're someone that travels often and wants access to the lounges, which once you get access to the lounges, all the food and drinks are free. So it's really awesome.
Yeah, just make it pay for itself, basically.
Yeah, absolutely. And then the gold card is 375 a year, but again, it's really just meant for like business purchases, ad spend or business services that you're going to get that from. And it's only the 2 highest categories. So it's not on all of everything. It's just the 2 highest qualifying categories. So those are the 2 that I would go after. But then there's also the Marriott, the Hilton, the Delta Sky Miles. So these are all really great cards, and these are all on the business side. Now, mind you, they do have a lot of personal credit cards, but why not go after the business ones? Because they're not going to report to your personal credit. That's the great thing about
Yeah.
it. And they don't report to your
Understand.
business credit either, really. The data is reported to SBFE. So as long as you're paying your minimum, you're good.
But you have to PG these business American Express cards.
Absolutely.
And then you can
Absolutely.
just remove those remove the
Oh, hell
inquiries.
yeah. That's exactly what I did.
Now she's in the process of getting finance for a mortgage. So how quick can we remove these inquiries from American Express?
Well, it's with experience. So all she has to do is just call them.
Just call them.
Yeah. Experian is the easiest credit bureau to get inquiries deleted from. So all that she would have to do is if she And you can go onto the American Express website and see if you like pre-qualify, see if they can go through the pre-qualification process. Um, if she does get an inquiry from them, call Experian, say, hey, is this the fraud department? No, can I talk to the fraud department? Hey, I had an unauthorized inquiry that popped up on my credit report and I need to get it deleted, and have them remove it. And then another backup to that is Experian offers Experian Upload. So she can upload just like a statement saying that this was unauthorized. And then if you do like help her with like an FTC report and put that inquiry on there, that way you can say that you already reported it and uploaded it. And they
Okay.
should take it off within 72 hours.
So the first round of cars to go for is, would you say the blue, the gold?
I would say the Blue Business Plus card and the Blue Business Cash card, because they don't have an annual fee and they also are going to have 0% interest for 18 months.
Okay.
So yeah, those are the ones that I would go after, because the other ones, they all have fees. And, she could go after some of the other ones if she wanted to, but she's going to have to pay those fees.
Yeah, those things. She's already
Yes,
paying like a
Nicole.
person.
Yes,
Go
sir.
ahead.
Yes. Do you have like I would say like a cheat sheet for credit card application, like what to put and where and when
Yeah,
to
I
put.
think I actually have that on one of the slides in this presentation. So yes, I will. We're going to be going over that. I
Because
actually have
some
it on the personal
application,
side and the business side.
yeah, some application when you're doing it, because there's a mistake that I've been doing myself when doing an application. I used to put myself as a owner or CEO
Yeah, no, we don't do that.
yeah,
We're just
that's
like
a
an
big
executive
mistake.
director, we're an operations
Hmm.
manager, we're an operations
Yes,
director,
and then
something like that.
when it comes to your rent, right? Or
Hmm.
like they say, like, what's the best amount to put?
Less than 800.
Okay, less than
800
800.
and lower.
And your income, like
The
your
higher the better. If you want
okay,
to fly under the radar, less than 200,000 unless you can back it, because oftentimes if you go over 200,000, they could request tax returns.
okay. But those tax return, I'm pretty sure they don't check them, because if they don't ask for the transcript, right? They just ask for the like.
American Express does. Some banks, smaller banks, probably won't, right? And here's another thing to consider. Some banks might even say, oh, well, do you have a pay stub? Uh, People can make pay stubs all day, every day. I've had so many people that have come to me for pay stubs
Mhm.
and, you know, whatever, they get
Okay.
approved.
Because I know on the tax part, there's a form 45060. If they don't ask you to sign that form, they can have
Right.
access. Like they
Right,
can
that
get
you
a
have to
people
sign the
filing.
form for them to get
Yeah.
access. And a lot of times when the banks request that, a lot of people just don't get back with them because they're like, well, I don't qualify. I'm not doing the tax returns.
Okay. Okay.
All
Okay.
right, so
Thank you.
let's get moving on this here because this is a lot of information and we're only on slide 35. But those were all the good cards that I would get on the business side. And bank branch locator. If you guys are not familiar with bank branch locator, get familiar with it because this is a great tool to be able to locate the banks and the financial institutions in your client's area. So obviously, like I'm in California, so I'm not going to be able to get a bank account with Truist, but I educate a lot of people about these different banks and I use Bank Branch Locator to see, hey, oh, you're in Louisiana or you're in New York. Let me look up and see what banks are in your area and we can go from there. I can kind of tell you where you should go and get funding off of. And I'm also going to ask them who they have relationships with, and find out who they already have existing checking account and savings accounts with on the personal side and the business side, because those are already existing relationships and you can easily go there. iBankNet is another really great tool, and this is how I'm able to pull the data that I'm showing you guys tonight is on the top financial reports based on assets. This is going to be from iBankNet. So if you're looking to pull this data, you can head over to their website and look at it as well. And then again, this is the financial reports for the leading credit unions. And you can see here, there's a lot of them that I've never even heard of, like Idaho Central Credit Union. Dang, I've never even heard of that. But I'm sure it's a really great bank because it's a small local one. I'm sure you have to have an address inside of Idaho or something, but you can always use family or a virtual address. There's also creditunions.org where you can search for different credit unions, but I like, any of these tools are going to be helpful for you guys. There is another association that I haven't necessarily talked about thus far, which is the financialfitnessassociation.org. And this is an association that is very cheap to join, just like the ACC. And they are partnered with a number of different credit unions. So, like the ACC, your association membership will allow you to gain access to credit unions like these. San Diego County Credit Union, a great credit union, because you can do the pledge loan with them as well. Chevron Federal Credit Union, they're a good one. First Tech, Travis, there's a lot of good options. Service, that's a good one. So this is another just gem that you guys can do for only $8 for a 1-year membership with them, and it does not automatically renew. So you'll have access to over 300, actually no, not 300 banks, but 350 articles, podcasts, different things that are included. But obviously the majority of the reason why you would want to join is just to get access to additional financial institutions. We talked about the ACC, which is the American Consumer Council. You can actually join them for free with the code that I gave you. I think it's like consumer, and you'll get access to all those places. I did a whole class on that. I'm not going to go over that. Now, a lot of people ask me, can a new business get funding, right? Absolutely. Absolutely. A brand new business that's only 3 months, 6 months old can absolutely get funding. How? They can use personal credit and get business credit cards and business lines of credit. There's a lot of banks and financial institutions out there, like the smaller credit unions, that will welcome new businesses with open arms. There's others that are going to be like, hey, hold on a minute. No, 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 not yet. Come back in about a year and a half. But there are some that are going to welcome you. The best way to find out who is to look at their website and to see if one of the qualifications is for the time in business to be 2 years, or if they say that they work with businesses that are less than 2 years. A lot of times, just simply going on their website and reading the fine print will answer a lot of your questions, because we're the ones that have to do this research for our clients when we're working with them, because clients are just simply not educated enough to do this. Yes, it sounds simple. And when I think about it after all these years, God, it's so simple. But we're just not educated about this stuff. We don't know about this type of information. It's not taught to us in school. We literally have to find out the hard way sometimes, right? But your credit score, your personal credit score, will need to be at least a 700, unless you already have an existing relationship with some of these banks. And at that time, you might be able to qualify for a 680 or 670. If you have good income or if you have good cash flow, they could look past that. So it's dependent upon credit and cash flow. Okay, that's the biggest factors when it comes to business credit. So don't be fooled that these people showing you these different screenshots of them getting approved for an $80,000 American Express, no preset spending limit. It's bullshit, okay? Because that's what they spend on their cards. That's their spending trends. And I guarantee you, if they were to try to run their credit card for $80,000 with American Express and they've never ran an $80,000 charge before, it would get declined because it's outside of their spending habits, okay? So again, you have to think within reason. This stuff that people show online, they probably have 1,000 clients, and the results that you're seeing are from probably like 5 or 10% of these people, because that's the reality of it. All right. It doesn't come quick. It doesn't come easy. You got to put in the work. All right. A lot of people also don't understand that there is a huge difference between small business credit and commercial credit, guys. There are millions and millions of small business owners in the United States, and there are millions of commercial businesses. An example of a small business would be me. I'm a small business. Commercial, McDonald's, they're a commercial business, right? What's the difference? Well, revenue for number one. If McDonald's went to American Express and say, hey, American Express, we as McDonald's Corporation, we want to apply for corporate credit cards, because there's a difference between corporate credit cards and credit cards. Okay. Small business credit cards and corporate credit cards are two different things. And you have to understand the difference. Corporate credit cards are charged cards. You got to pay the full balance. Okay. Credit cards, you can pay over time, get much better rewards and all that good stuff, right? So if you are a large corporation with an annual revenue of $2 to $4 million, then banks like American Express and these other banks will give you charge cards without a personal guarantee, because the business revenue is higher and you would qualify for corporate credit based on your business revenue. The company size. So corporate credit cards are for very large companies. Small business credit cards are for small business owners. Liability. With corporate credit cards, the company is liable for the debts. This is what everyone wants, right? They want the no liability cards. Do you really though? Because corporate credit cards are not that great. And I'll tell you why. Corporate credit cards earn rewards for the company. Okay, cool, right? Business credit cards earn rewards for the cardholder. So you can earn a lot more with business credit cards. The payment terms. Corporate credit cards must be paid in full each billing cycle. Business credit cards are revolving, so you can pay them over time. Corporate credit cards generally are only for C Corp and S corporations and are eligible for S Corp and C Corps are usually the only type of corporations that are eligible for corporate credit card programs. They also might have a minimum annual spend that you must have on your card. Okay. Some corporate credit card programs have at least 15 card holders that you have to have. So they have minimum requirements. But if you are an LLC and you are already established with a healthy credit history, they could also consider LLC. So that's why when I tell people about, choosing their entity type, and everyone online is talking about LLCs, like LLCs are great, but if you are looking at the bigger picture and you at one point are like, look, I want at some point to become corporate credit, whatever, then you're going to want either an S Corp or a C Corp. And they're different, just different in the taxations. Here's the difference. There's a breakdown here of the difference between the business credit cards and the corporate credit cards. And I'll let you guys kind of review that later. But honestly, you're going to have more benefits with the business credit cards, even though all business credit cards are going to require a personal guarantee by someone that holds at least 20% of that corporation, who has at least 20% ownership in that corporation, which could be a credit partner, right? You could also look for a credit partner. Let's talk about no doc funding. This is a really popular topic, especially online. No documents, no financial records, no tax returns, just goes off stated income. Okay, that's what no doc funding is. Navy Fed, they're no doc. Most of these banks for credit cards are going to be no doc, right? Especially credit cards. I very rarely do I hear banks that are requesting, some sort of financial records or tax returns or something like that for just credit cards. So that's where we kind of have, a positive, especially also for the lines of credit. But business credit cards are usually just stated income. Key takeaways: no doc business loans are designed for investors and entrepreneurs to minimize the documentation requirements associated with the traditional investment loans, right? Despite the term no doc, these loans are low doc, requiring some documentation, but allowing them to kind of streamline the application process. Common no doc loans include bank statement and asset based loans. Pros of no doc loans include a streamlined application process and quick access to funds, flexibility, and approvals. But just know banks are really tightening up. So, again, that's where it comes the relationship. You want to build a relationship with banks and financial institutions so that way they don't need to ask for documents. Most common no doc funding programs, like I said before, business credit cards, business lines of credit, business auto loans. You can usually acquire up to about $50,000 with no documents. Now, Chase, since they're the leader in this thing, and obviously they're the number one bank right now, and that's probably a huge reason why, because they opened up their funding gates. Okay, they said, let the money roll to the people. And that's exactly what they did. They're giving out $80,000 credit cards on the business side, guys. I'm seeing kids 22 years old, 22. Mind you, you have to be 21 to get a credit card without a cosigner. 22-year-old kids getting $80,000 business credit cards. Made me sick. Like, what the hell? But they got good income, So Chase is really giving out some high limits. And we're going to talk about the data points that you need to put on the credit card application. Low doc funding basically just means they're going to need some sort of documents from you, whether those are some financial records, it could be a tax return, it could be a letter from the IRS with your EIN number on it. That's what US Bank required from me. So that would be low documents, right? Doesn't necessarily mean that it's going to be financial wise. Most common low doc funding: equipment loans. Some lines of credit could require low docs. Business loans, some even credit cards, but very unlikely, right? But most business loans are going to require documents. Now, full doc loans, this means they're going to want everything. This is more like your SBA loans, your government loans. You're getting a lot of cash, right? They want to see business documents, financial records, tax returns. Varies based on approval, of course. Most common full doc funding programs: SBA. We're going to be talking about that in this presentation. Business loans with large limits. Okay. There's also what's called CDFI programs. Has anyone here ever heard of CDFI? Great program.
Yes, I have.
You have?
No, I haven't heard of that.
Yes.
All right. Very good. So CDFI, Community Development Financial Institutions. Basically, they have funds to be able to invest into the community to promote social and economic progress for individuals and communities who may not qualify for traditional loans. So Bank of America is one of the banks that offers CDFI loans and opportunities. So that's why you want to build a relationship with the bank, with someone at the bank, so they can help you acquire these type of opportunities for your business. So it's not typically, um, you know, something that's advertised a lot. That's why you want to speak directly to the banker and ask them what type of CDFI programs they have. And you can research what banks in your area might be offering some of these CDFI programs. So that way you can get funds from your banks for local community development, if you will, to fund projects that strengthen families, businesses, and communities in underdeserved areas. So this is a huge, huge opportunity. And a lot of people don't even talk about CDFI banks. And it's not necessarily just Bank of America. There's a ton of other banks out there that offer CDFI programs. Okay.
Can I
The
ask a
most
question on
common
that?
type of loan out there from the government is going to be SBA loans. Small Business Administration. They are a government agency. They themselves are not going to give you the funds, but what they do is they partner with banks and financial institutions and they back the loans with the banks. Okay. So they are small business government backed loans that make it easier for small business owners to get the funding that they needed. In fact, when I first started my business, COVID had just hit and I was like so confused. I did not know what to do. And I just had a kid. So I was like stressed out. And I applied for some SBA funds, and my credit score was not even a 640, not even a 640. They still gave me $12,000. So that's a perfect example of going to the small business, seeing, going through the process and seeing what you can qualify for. I didn't think they were going to give me anything, but I tried and they did. So SBA is can be a low doc, but you do have to have, some sort of business setup. It needs to be something that they're going to feel comfortable with, right? Now, the most common type of SBA loan is going to be the 7A loan, which you can use for pretty much anything in your business. It can be inventory, equipment, working capital, payroll, whatever the hell you need. Okay. So that's the great thing about it. Now, I'm not going to go over all this stuff here because a lot of it's in these other slides, but basically the SBA likes collateral. They like to do business with people that had collateral. So that's why they did business with me, because I had collateral. And they're like, oh, well, if you don't have credit, you're going to need, either cash flow or collateral. And I had collateral. Now, generally, if you're going to go after SBA, you're going to need a credit score of at least 690 in this day and age. Mind you, when I got that, I think it was like in 2019. So it was 4 or 5 years ago. And things have certainly changed since then. So they have a few different programs. We're going to be going over some of these different programs in tonight's presentation. So they have the 7A loan, they have the 504 loans, and then they have micro loans. The 7A loan is going to be what you probably want to go after, but if you don't qualify, you can look after a 504 loan or a micro loan. Micro loans are like $50,000 or less, but they help businesses and certain nonprofit childcare centers, and they can be very helpful for a lot of businesses. But with this 7A loan, a lot of people come to me and they're like, hey, I want to purchase property with my business. Man, I'm so angry with this one client of mine, off topic, but he signed up and then a few weeks later he canceled because he's like, oh, I'm working with a realtor and the realtor told me that I'm not going to be able to purchase property in my business name. And I was like, who the fuck told you that? And he's like, oh, my realtor. I'm like, your realtor that specializes in residential property told you that, huh? Like, your realtor doesn't know shit. Your realtor doesn't know shit about credit. They don't know shit about funding. Why the fuck would you take their fucking word for this? They're a licensed residential realtor, right? I was so frustrated with him because I feel like he's just one of those people that will listen to anybody say anything. Yeah, you can't buy residential property under your business name traditionally on the business side. No, it's not a traditional way of doing things, right? But if you go after a 7A loan through the SBA to get funds, you can purchase property. And that's the great thing about it. So you can absolutely purchase property on the business side. You can even use business credit cards and business lines of credit to purchase property. In fact, I was looking at a website today where they auction off homes. Auction.com is one of them. And most of these auctions, home auctions, will require you to bid on the home. They'll tell you kind of what the starting bid is. But if you have access to a line of credit, you can purchase homes as long as you can pay for it in cash. And that's all they care about. They just want the cash payment. But all you have to do is go to the bank and get it, withdraw it against your line of credit if you have a line of credit. So that's what makes it powerful. The benefits of an SBA loan, they have very competitive terms. So they're going to make it affordable for you long term. They want you to win. They don't want you to take out money and not be able to pay it back. So they really set you up for success. That's why I'm a huge advocate of the SBA lending. One of my best friends that I grew up with, she's been in the banking industry for 20 something years. She works at City National Bank. She's one of the higher ups that is in their SBA department. So I talk to her all about this stuff all the time. Unfortunately, City National told her that she couldn't come on and talk about things because they don't want people knowing their secrets, right? But privately we talk, and she shared a lot of great information with me about it. And it's just an amazing program that a lot of people just are not educated about. So that's why it's so important for you to work with a relationship manager at the bank, because the relationship managers are going to get you into the SBA doors, right? And then the people in the SBA underwriting department will underwrite your file, but the relationship manager can help you walk through the process. So that's why it's really important to have those relationships. But you can get lots of funds for working capital, fixed assets. There's a lot of opportunity here, guys. So you must be a for-profit business. These are the eligibility requirements, right? Directly from the SBA website. You must be doing business in the US. You must be credit worthy. The business's credit must be sound enough to assure loan repayment. Okay? The business, you are your business. So what they are saying is you as a business owner must be credit worthy. And if you have anything negative on your business credit reports, that's also going to cause a problem. So just be credit worthy on both sides and you won't have an issue. And they are going to have, like I said, the best type of funds that you can ever get, especially the terms. They have very low terms. The maximum loan that you can get for an SBA loan is about $5 million. And the maximum is a 10-year repayment, which is pretty damn good, right? You can manage that. You can also get equipment. You could purchase equipment. You could purchase real estate. If you are using the SBA 7A loan to purchase equipment or to purchase real estate, you can use that collateral to extend the repayment terms for up to 25 years. So that's very important to understand, because they will feel more comfortable when they have collateral, right? So if you default, they could just take the property. It can be used for construction, expansion, renovation, land, or building purchases. So I used to work for a company out in the Bay Area, very smart businessmen. They operated a tech manufacturing company. They purchased the building that they operated in, and they purchased the building next door. So they owned the entire building that the company was now in, and they paid rent to themselves. Like I did all their books and stuff. So I saw how smart these guys were. And I'm like, man, they were so smart for buying this property, because they can charge their business a hell of a lot more and make a profit every month on the property itself. So just a great way to be creative with financing, right? SBA loans are going to require 640 plus credit score. In this day and age, I would probably recommend going with a higher credit score if you could. But again, cash flow could counter that. So if you have good cash flow, you can have a lower credit score. If you have more collateral, you can have a lower credit score. But they are going to look at your credit. They're going to have you fill out their SBA form and submit it to one of their participating lenders. You're always going to be using an SBA bank, and we'll get into who those banks are. And they are going to ask for financial records. So they're going to look for personal financial statements. This helps the SBA and look at the eligibility as far as what your tax returns were. You don't have to show a tremendous amount if you have a solid business plan or a solid reason for the funds, because you have to make it make sense for the bank, right? How are you going to be able to pay us back? That's what they want to know. If we give you this money, how are you going to make it work for you so you can ensure that you're going to pay us back every single month, right? That's what they need to know. Profit and loss statements must be within the last 180 days of your application. You're going to need that projected financial statements. Include a detailed 1-year projection of income and finances and explain how you expect to achieve this projection based on the funds that they will provide you with. Okay. Use ChatGPT to your advantage and let ChatGPT draft something for you. You can say, hey, ChatGPT, draft me a projected financial detailed 1-year projection income and finances plan and explain how I expect to achieve this projection for SBA 7A loan, and give it the prompts. Be detailed as possible, and ChatGPT will spit you out something amazing, right? And then you can say, make it sound like it's from a real business person. Make it sound great, professional for a bank. You can give it different prompts to give it different things to do. So it's real helpful. Again, you're going to have to share all the personal owners' information so they can look at their background. If you have any business licenses or certificates, you can give that to them. And if you are a corporation, you're going to want to have your corporation stamp on your corporate seal on the SBA loan application, which you can order online. There's also going to look at your loan application history, which would include any records of loans that you might have applied for in the past, incomes tax returns. Definitely include your resume. Have ChatGPT do your resume as well. Include personal resumes for each business principal. You're going to want to provide them with a business overview and history of the business. So you're going to provide them with the history of the business and how it has faced challenges, how this funding will change its trajectory, and why you need these funds, how you're going to allocate it, how you're going to make it work for your business. Again, ChatGPT can do all of these things for you in a matter of seconds, okay? Leverage AI. There's no reason you can't. Even if you use the free ChatGPT, it still works perfectly fine. And if you pay for it, it's only $20 a month. So either way, it can help you. Business lease, if you do have one, you want to include a copy of the business lease or a note from your landlord with the terms and so on. But when you work with the bank, every bank is a little bit different because, again, SBA is a backed program. So there's individual banks that do these programs, but those banks might have their own set of rules in regards to the program, right? They might have some additional things that they look for, or maybe they don't look for. So just beware. 504 loans. No hard maximum loan amount, but typically caps at about 5 million. Most 504 loans have anywhere between 10 and 25-year repayment terms, which is great. Can be used for long-term fixed assets for expansion or modernization, usually real estate or large equipment, refinancing of large equipment and or owner occupied commercial real estate. You guys get that? Owner occupied. Owner occupied. You can buy a building and start your own mailbox, P.O. box company. You can start your own virtual business location. That's a great business option because you're not going to be listed as a high risk business location. You can buy mailbox walls and have a mailbox and won't even look like a postal box. So there's so many opportunities that you can do. Another thing that you can look at is purchasing land to build um, parking for truck drivers. That is something that I don't know how many people in here have ever driven cross country in a fucking 18 wheeler, but unfortunately I have, and I fucking hated it, and I will never fucking do it again. But one thing that you will notice is there is not enough parking out there for truck drivers, especially if they get to a lot after 6 p.m. So there's a lot of land out there, and trucking parking is absolutely needed in this nation. But the 504 loans are primarily used to buy businesses and to buy real estate, and your credit score is going to need to be at least a 680 for this type of loan. Micro loans, again, great for up to 50K. That's why the name micro it's a smaller one for existing and startup small businesses. So these are only for profit. So you cannot be a non-profit unless it's a like child care center or something that's like super helpful to the community. If you want to apply for a micro SBA loan through an SBA lender, you're going to have to do it somewhere in your area. You can locate the right lender on the SBA site, or maybe look at some of the banks that I'm going to give you tonight. But they also have an SBA lender tool on their website that you can search. The average micro loan amount is about 13,000. This is actually the loan that I got when I first started. I got about 12.5, but my credit was really crappy. And it's up to a 7-year term, can be used for working capital, inventory, supplies, furniture, fixtures, machinery, equipment, marketing. It's not to be used for paying existing debts or to purchase real estate. And your credit score needs to be at least a 620. Basic requirements for pretty much any type of funding that you're asking and you're wanting to get like cash funding put into your bank account. These are the basic requirements. Personal tax returns, at least 2 years. Business tax returns, they usually want about 2 years. But if you don't have it and you only have personal, give them what you got. They still might be able to make it work because, again, there's a lot of gray area. And a lot of times it's not like, well, this is it, black and white. If it ain't this, it ain't this. No, there's a lot of, well, if they got cash flow, we can kind of overlook that. That's how it goes. Okay. Recent pay stubs. Make sure if you are a business owner, you have yourself set up on payroll. Get ADP. I like them because you can pay your payroll with a credit card and start getting legitimate pay stubs for yourself. And that will help you also qualify to purchase a home, especially if you are a entrepreneur that doesn't get a real pay stub. Now you can create a real pay stub for yourself, which is important for, entrepreneurs, 1099s, and, gig job workers. You want to have a list of collateral that you have, list of current business assets, your business plan, again, ChatGPT, cash flow projections, contracts, quotes, and purchase agreements. Existing businesses will also need to document the business financials, like the business tax returns, balance sheets, income statements, business lease and contracts, business license and permits. The SBA Community Advantage Program, this is a program helping the community, but it is set to expire this September. So I don't know that they're really pushing it out there, but it is a term loan or a line of credit up to $350,000. And it was kind of like a pilot plan, and they might extend it. I don't know, but you can check out some of the banks and see if they are still offering them. A lot of the banks that I looked at, I did not see the Community Advantage program because I think they're going to be kind of doing away with it. But we'll see. We'll see what happens. Basic requirements, kind of, same thing as everything else. 600 credit score, must be a for-profit business operating in the U.S., all that good stuff, right? SBA Express loans, this is term loans or line of credit up to $500,000 with 10 years to pay it back. Working capital, equipment, inventory purchases. up to 25 years for real estate purchases. So this is pretty good. Lines of credit up to 10 years. That's why I like the lines of credit, because you can withdraw against them when you want to go buy property. And that's great. You can buy bank owned property, you can buy auction property, which is going to be the best thing going. And all you need are the funding, right? And then you can get it. Funding speed from the SBA, you'll get a lender approved application will receive a response from the SBA within 36 hours, and funds will be received within 90 days of approval. So that's why a lot of business owners like the SBA Express, because it's faster. It can be used for real estate purchases, business expansions or renovations, equipment purchases, and working capital. And guess what? Startups with 1 year or less in operations can be eligible. So, again, if you have cash flow, if you have decent credit, a lot of things can be overlooked. That's why it gets so confusing, because everyone's like, well, this, well, that. No, there's never anything that's like black and white with credit. Anything can kind of be overlooked if you have the right credit, if you have cash flow, you have the right things that the banks want to see. What do the banks want to see? Cash flow, credit flow, and collateral. Those are the 3 C's, right? These are the basic requirements. We kind of already went over that. How to apply for SBA funding. This is going to be directly with the banks and the credit unions that are already in your area and partnered with the SBA. A lot of them are the banks that we already know and love. Bank of America, Chase, all that good stuff. But you want to apply through the banking relationship manager, your RM. Okay, that's what we call them, RMs, relationship managers at your local branch, because they know they've done this a lot, especially the ones that have been there for a long time. You can kind of pick their brain and say, hey, Bill, is it a good time for me to apply? Let's go over everything, Bill. Come on, man. Help me out here. Bill's going to tell you what's up. He's been at the bank for 10 years. This is what he does. Okay. And guess what? Bill has an incentive to get you approved for these funds, because that's his job as a relationship manager. His job is to bring business into the goddamn bank. That's his sole job. All right. So you want to get in with the good side of these people. All right. These are the banks that are the SBA lenders. City National. My best friend works for City National. I know a lot of great things about City National. Right now, they're one of the leading SBA lenders, because they have done millions and millions of dollars in SBA lending. And let me tell you something about City National. And this is coming from somebody that's in the, like, one of the top dogs there. They look at Dun and Bradstreet. They look at Dun and Bradstreet. I was shocked when she told me that. I said, wait a second. They don't look at Experian on the business side? No, they don't look at Experian. I said, well, who do they use? Oh, we use Dun and Bradstreet. She said, we look at Experian on the personal side, but we look at Dun and Bradstreet on the business side. I said, wow, you guys are really old school. They sure are. They just got a new CEO. They got a new CFO as well at City National. So I don't know what changes are to come, but they've kind of strengthened up their SBA lending. They are not lending to people that are going to purchase commercial buildings or commercial real estate right now. I can tell you that for sure. Those apps are getting declined. So I would not go there if you're looking to purchase commercial real estate, or if you have commercial real estate collateral, because they are not accepting commercial real estate as collateral right now because it's too high risk. But all in all, great bank to check out, and they offer SBA lending. Chase, we love Chase. They offer SBA lending. Wells Fargo. And you can go to these guys' websites and just check out some of the programs that they offer right on their website. Not every bank is going to offer every program, but most banks are going to offer the SBA. The SBA 7A loan and the 504 loans. Those are going to be the most popular. Huntington Bank, that's another one. And you'll notice here, see, personal, business, commercial, right? So there's a difference between small business and corporate, okay? Just slightly. But you'll see they have a lot of stuff here, and it's always like, hey, contact us, come into the branch. It's never really like, hey, just apply right here, right? Because they want to talk to you first and make sure that you're going to be a good candidate for the program. Citizens Bank, that's another one of my favorites. They offer 4 different programs right now: the 7A, the SBA Express, the Export Express, maximum loan about 500,000, and the 504. So they have a few different programs: Live Oak Bank, Celtic Bank, Smart Biz. This is one of the leading ones. Now, SBA, the thing I love about SBA is they share data, and data will tell you a story. If you follow data and you understand how to read data, it will take you a long ways in life, just like it did with these banks and all these companies that are in this type of niche. Data is going to tell you everything that you need to know, right? And that's the great thing about it. So this is the data from 2023, and this is the 7A and 504 lender report directly from the Small Business Administration for 2023. Okay. These are all the top banks, and you can see exactly how many approvals they had, what the total approval amount was, and what the average loan size was. So if I am looking for a lot of money, I'm probably not going to go to Huntington Bank because their average loan size was only $180,000. If I'm looking for a big bag right now, I'm going to head over to Live Oak because their average loan was 1.5 mil. Okay. But Huntington approved 7,300 people. Live Oak only approved 1,200 people. So again, you got to understand, sometimes we're not always at that point in our business where we can get that big dog bag, right? But we're going to do what we can in the meantime. So we might have to go over to Huntington and get a little small bag to get to the next bag. But you can see here, great data points. You can see clearly Huntington gave the most amount of approvals, but this is based on the highest approval amounts, and the average loan size is important too. But this is based on the total amount that this bank has actually lended out in the year of 2023. So you can see here, based on the summary, there was over 57,000 businesses that were approved for the 7A and 504 loan programs. And that's a big goddamn number right there. Okay, that's a lot of funding that's being put out there, right? And these are the banks that are giving it. Chase, First Bank, US Bank, Bank of America, Newtek, Wells Fargo, First, Internet Bank of Indiana, TD Bank, Bay First, Celtic, Byline, ReadyCap, Newtek, Huntington. The data don't lie. Okay, that's one thing that ain't gonna lie is data. Okay, I'm going the wrong way here. This is the top 2023 SBA lenders for the 7A loans. Okay, so you can see there's a lot of banks here that I'm like, who are these people? I don't know them, never heard of them. Like Candace Bank. But hey, they're giving out a pretty nice, decent loan to people. I'll take it. Key Bank, that's one that we've all heard of. BMO, First Financial, Old National, PNC, South State Bank. Okay, City National. There we are, right there, my friend. Umpqua, Citizens, Truist, Zion's, that's another good one. But these are a ton of places that we would have never known about. Like, man, I didn't know about that bank. I didn't know about that bank. These are the banks giving out the money, right? That's 2023. This is 2024. So this is the 7A loan. I selected the 7A loan data here only. And these were the top banks for the actual 7A loan, which Huntington was number 3. Live Oak was still number 2. Newtek out in Florida, they gave out 2,298 approvals. Average loan size was half a mil. Like, damn. You can buy some property with $500,000. You could buy a couple properties with $500,000. So you can see the banks here that are giving out the bag, right? And this is the real live data from 2024. These are the top 2024 SBA 7A banks right here. So again, these are the banks that we all want to kind of get familiar with if you want to get an SBA loan, because we know that they're the ones that are giving out the money. You know, they're the ones that got it. You can see here by the numbers. And you can get this data on the SBA website. So enough about that. Another thing that a lot of people don't talk about is credit reallocation. So credit reallocation is basically where you can reallocate funds or credit limits between your different credit cards. So if I have, say for example, 3 Bank of America credit cards, one with 500 and the other with, 10,000, say I wanted to move all of that limit into one card, I can call Bank of America and ask them to reallocate my credit limits all to that one card. So I have a higher credit limit with one card, and I could, potentially close the other cards if I wanted to. That is not something we want to do. We don't want to close cards, but it could help get you a higher credit limit if that's the goal, is to get higher credit limits, because you can move around your limits essentially. Credit line transfer is moving around credit that's available to you. Don't get it confused with a balance transfer. That's a debt that's owed and you're just transferring it to another credit card. This is where you can actually move your credit lines or credit limits around and potentially get higher limits on one card by combining 2 cards into one potentially. Now here's some credit game for you guys. With Chase, you're able to transfer an entire limit, close a card once every 12 months. Once the 0% intro period is over, and then you can reapply for the same card under the same business. You can use this method to maximize your member rewards, bonus points, so on and so forth. But usually if you're doing anything over like 35,000, it could result in a hard inquiry, because Chase is, a little bit more stricter bank as far as credit goes. So they just want to make sure that there's no risks or signs of risk that are going on in your credit that would, potentially halt their decision making. So that's just something to be aware of. Banks that will allow credit reallocation are the following. Now, I tried to reallocate my Capital One cards a couple years ago, and they told me that they no longer offered it. But I was told by one of my clients that that has changed. So now you can request it online, according to someone that told me this. I have not confirmed this information myself. So again, information can change, but these are the known banks: Bank of America, American Express. American Express, you have to do it online, and I put the link right here for you guys in case you wanted to reallocate some funds. Barclays, Chase, US Bank, Wells Fargo, Elon. Now, Elon, we're going to talk about Elon a little bit more later on, but they are basically like a credit card underwriting company that offers branded credit cards for those banks to like over 1,600 financial institutions and credit unions. So they all do their credit cards through Elon Financial, which also Fidelity is an Elon Financial credit card. So it's not necessarily like you're not going to go to Elon Financial and apply directly with them. Kind of like the SBA, they're the ones that like do the backing on it. They're the ones that do the underwriting. It's their credit card, but they brand it to those banks. So it's a little bit of a different situation. But you can only have about 2 of those cards. So you're kind of limited with Elon Financial cards. And if you want to reallocate funds with Elon, it's kind of hard because a lot of them are like small banks. So it's not like you're going to have, like if you have 2 credit cards from one Elon bank, you can reallocate, but you can't reallocate to different banks. So it's not going to work. First National Bank of Omaha, and Navy Federal. So if that's something that you have experience with, try it out and share your experience. A lot of people ask me, well, why would I want to reallocate my funds? Because whatever, it just doesn't matter. Well, you might want a higher credit limit because if you can get your highest credit card to 20K, that's going to help open up doors for you when you go and apply for credit cards in the future. If you only have a $10,000 credit card, chances are when you go and apply for your next credit card, they're probably going to give you 10K. But if they see that you have a 20K, oh, okay, well, we'll give them 22. So you want to have that comparable credit. And plus, it's been open longer, so it just looks better. And if you plan on closing a credit card out that you don't want, and you have like a ton of credit cards, so it's not really going to hurt if you close one that you just don't want or whatever, that's fine as well. I have closed credit cards on my personal credit and it hasn't affected me, but that was once all of my cards had at least a 2-year history, and those cards were just like crappy secured credit cards. So you can, but we don't want to do it prematurely. So if you have questions, you can always book a call and we can talk about it. If you plan on earning more rewards and bonuses, if you plan on building up the threshold for organic spend, strengthening relationships, and so on. So really, I do it for the credit limits. This is the reallocation credit overview. So you can request a credit limit increase with each credit issuer. And usually, if you do it within the app, it's a soft pull. If you do it with a rep, it's a hard pull, right? But it can vary by bank. Request inside of the app for the chances of getting a soft pull over a hard pull. You want to reallocate your credit limits between your credit cards that have the same issuer, okay? And basically, you just try to get those cards up to the highest limit as possible. So that way it can help you open up future funding opportunities for yourself. This is a lot of stuff that we've kind of already talked about, and we don't necessarily need to go over that, but you guys can read it later. Funding framework and funding sequences, what the banks don't tell you. Oh my goodness. Okay. This is some interesting information because I'm gonna tell you right now, the banks, they I feel like they are so unhelpful. They are so unhelpful. If you don't have a relationship with them or you're not talking to the relationship manager or the right one, they act like they do not know what is going on. They don't know why you're not able to open up a bank account with them. They just have no idea what is going on, but they just couldn't do it, right? And I remember I was told that so many times and I felt so defeated. And at one point, I was at the point where I was going to sign up for a Chime account because I could not open up a bank account. And finally, the rep at Chase was like, well, if you just pay this like old $230 balance, you'll be fine. And I was like, what? Why wouldn't anyone have just told me that shit? I would have been paid it. I didn't even realize it was on there. So, if you have stuff that's on your check systems, on your early warning, we got to get all that stuff cleared up. We're going to go over what those are, right? So here's some of the reasons why most people are getting declined. The business isn't structured properly, or it's not in good standing. The too new of a business. Banks generally like to see 2 years in business, but some banks will mention on their website if they work with newer businesses. If you are trying to do business with a bank that's not compatible with your industry. For example, if you are looking for equipment because you're a truck driver and you go to a bank that does not work with transportation, then they're not going to approve you. So we need to look at their website and understand what type of bank they are. And if they say we do not work with these industries, we're not going to apply with them. Your personal credit profile is too weak. This is the downfall of most small business owners. They don't have a strong enough personal credit profile, not enough credit age, not enough credit period, not enough credit cards, not enough positive history, and not enough credit cards with high, limits. And if they do have credit cards, their usage, their high personal credit usage is just out of whack. So it's not going to work. Again, we have to make sure that we're educated about these data points, especially when we're going after funding. Applying for the wrong funding products in the wrong order. Your file keeps getting flagged by banks, probably because you're putting information that's mismatched or they know you're lying about it. Fraud alerts on your credit report. Your business is appearing to be high risk because you have high risk words on your website. You're not listed online. You have no online presence. Again, you need to be listed online and you need to have a business website. Or you have bad business credit, or no business credit, because no business credit is just like bad business credit. It's just not enough data to understand if you're going to be a good candidate. Don't just wait for a denial letter to look at your reports. Get a letter, get your reports, understand the data that's on these reports. Okay. The number one reason why a lot of people are denied for bank accounts is because of the data that third party data furnishing companies like Early Warning, who is owned by the banks. You can see here, Early Warning. They are owned by PNC, Bank of America, US, Chase, Wells Fargo, Capital One, and BB&T, now Truist. They are the owners of Early Warning. Early Warning reports checking account data, just like the credit bureaus report. They report checking account data. They are the ones that Navy Federal uses. Okay. So if some people have bad blood in check systems and they can't open up a bank account because they've got some stuff on their check systems, they can check Early Warning and see if they can get in with banks that are just going to be using Early Warning until they get that cleared up. If you go to their website, you can actually pull your consumer report right from their website. So you can look at what is on there. It's extremely important for you to understand what is on these reports before you just go in blind, because banks are going to see all of this stuff. Okay. And check systems is the most common report that is used by banking, I guess you could say bank accounts or in the banking industry, right? Check systems is what, Chase, Bank of America, pretty much most of the banks out there, this is what they are using to look at your data. They don't generally pull your credit to open up a checking account or a savings account. Some banks do, right? But most banks don't. They were going to pull your data via check systems. So if your check systems is frozen, you are going to get denied. If your check systems is not accessible to them, you're going to get denied. If you have bad or negative debt that you owe someone that is reported to check systems, you are going to get denied. It doesn't matter if it's $40, $20, or $400. You're going to get denied until that is cleared up. So it's really important for you to get the data from these two companies and understand how to fix it, right? Just like with the credit bureaus, they all have to follow the FCRA, Fair Credit Reporting Act, because they are reporting and it is on financial records. But what they monitor is the number of accounts that you have applied for recently. So that's why it's important not to apply for too many new bank accounts in a short period of time. I say 3 and then wait 3 to 6 months. Okay. They also are going to monitor the number of overdrafts, bounced checks, unpaid fees, accounts opened, accounts closed, fraud, identity theft. If you have a bunch of like chargebacks that you've done on credit cards, they track all that stuff. ATM abuse. When we were younger, I saw my girlfriends that were going through tough times. This was back in the day when Chase had envelopes to deposit stuff through the ATM. They would deposit fake checks through the ATM so they could take money out. And it was like, man, you guys are going to have to pay for that eventually, but it's not my business, right? That's ATM abuse. Okay. But those type of things, they don't like this, right? They don't like that type of behavior. It's risky behavior to them and it needs to be resolved. So it will stay on the records for 5 years and, or longer if it's not resolved. LexisNexis is another one that holds a lot of data about us. Now, say for example, you pulled your report with check systems and you're like, oh wow, I have an old fee that I owe with like Chase or whatever. And I didn't even know about it, but it was only like 120 bucks. Just go to the branch and pay it. Okay. Or call them and say, hey, you guys are reporting this on my check system. I don't know what this is for. Do you have the accounting records of this? Can I ask you guys to waive these fees for me? Because I was not aware of this. See if they can waive the fees or simply just pay it. Once it's paid or waived and updated, it will go away. And now you can open up bank accounts. I have dealt with some people. I dealt with a young girl and she was very young in her early 20s and she had bank fraud that went on. Someone actually stole her identity when she was younger than this and did a bunch of bank fraud. So she had like over $50,000 in bank fraud on her check systems report. So she had to file a police report. She's like, well, I didn't really know what to do up until now. You got to file a police report. You got to go through the whole process, just like it were the credit bureaus, and send all that stuff into the bank and to check systems to try to clear that up and let them know that you were a victim of identity theft. And during the time that all this happened, you weren't even 18 years old. So, you just have to go through the process to get all this stuff cleared up, or it's going to continue to hold you back. And you're only going to be able to bank with banks like Chime and, crappy, banks. There are a lot of, second chance banks out there. Chase is one of those second chance banks. We'll cover that. But, we just don't want to have to go that route if we don't need to, if we can get that stuff cleared up. LexisNexis, they're one of the largest data reporting companies in the United States. Okay. They also report bankruptcy information, but you can request your report directly from LexisNexis. You can also freeze it, which I have my LexisNexis frozen, but it did cause an issue when I got auto insurance. So just be aware of that. I had to actually unlock it to get my auto insurance. So this is where they have the CLUE report, which is the Comprehensive Loss Underwriting Exchange, which is used for insurance, which I actually did go through. So yeah, it has to be unlocked. But they know everything about you. Okay. Most of the time when you go file a police report, it's through LexisNexis. Okay. So they have so much information about you, including they scrape the Pacer systems like every day. Their system scrapes Pacer. So they're going to get judgments, they're going to get liens, they're going to get bankruptcy information, and they're going to give all that information to the credit bureaus. Okay. So that's why a lot of times when we're fighting a bankruptcy on a credit report, we need to fight the bankruptcy with LexisNexis. We need to pull the LexisNexis report and dispute the bankruptcy with LexisNexis so they can take it off. They got a letter to us saying, hey, we removed it. Sorry. We're going to update the credit bureaus. We use that letter, send it to the credit bureaus to get the bankruptcy off. Usually that works with Experian, Equifax. TransUnion can be challenging to deal with, but I still use that letter from LexisNexis and send it to all three credit bureaus. Whether they use them or not, they're all connected, right? They all share data. Telecheck, they also are going to be looking up your banking checking history. So if you've got bad checks out there, it's not always the best thing. So it's important that we clean up all this information. If you owe any money, see if you can get it waived or pay it so you can get past it. Pay to get it deleted, guys. Just get it cleared up. You don't want to have this hold you back. Or if you only have a little bit left, you can wait until that record drops off, but you could be waiting up to 5 years. So in the meantime, you can open up some banks with second chance banks. And those we'll get into who those banks are. Now, here's some credit game for you guys because I actually did not know this when I first started applying for credit cards. Had I knew this information, it would have changed some things for me. And let me explain why. So there are 3 different tier levels when it comes to Visa credit cards. Okay. There are, your standard traditional Visa credit cards, usually, just regular ass credit cards, right? They don't have an annual fee, nothing special. They're just basic, right? Then you have your mid-level Visa credit card, which is called your Visa signature card, right? Peep game. Flagship card from Navy Federal is a signature card. Okay, what does that mean? Signature cards are going to be higher limits. Okay, so are Visa Infinity cards. The Visa Infinity card is the highest tier, one of the highest tiers of Visa cards that you can get. But usually it comes with a hefty annual fee of, at least $550 or more, right? But the Visa signature cards, those are where you guys want to be applying for. So if you have a relationship with a bank and they offer a Visa signature card, you want to go after that. And these are the data points for the signature card. So like the Navy Federal flagship card, that's a signature card. And all signature cards have a minimum credit limit of $5,000. All right. And this is all based off stated income. So they want to see a 670 credit score, like probably more, right? Some cards are going to require 720 credit score for the best odds of approval. But again, if you have a relationship, they can bypass that. And if you have high income, they can bypass that 670 or bypasses 720. They have many travel and protection perks. The income requirements are $60,000 for a single person, or if you have a household income of $100,000. So again, when you're using this data to complete your credit applications, the higher these numbers are, the more likely you're going to get higher numbers approved. They generally are going to give you 10% of what you make or 10% of your income. Okay. Just know that. Chances are, if you tell them, well, I only make $50,000 a year. Well, if you only make 50,000, they're not going to give you a $10,000 credit card because they don't want to give you more than 10% of your annual income. Okay. So, regardless of your income, it does require a good credit score to apply for these signature cards. And again, minimum credit limit of 5,000. The Visa Infinity, you're going to need at least a 720 score. You're going to need a household income of at least 100,000 or more. I like to put a 150 to 180. Regardless of your income, it's going to require good credit. And these have a minimum credit limit of at least $10,000. So these cards you don't see as much, but if you do see a Visa Infinity card, you want to go after that because if you put that your income is like $150 a year, you're probably going to get about $15,000 credit card. And that's pretty darn good. Okay. There's also the Infinity Privilege cards, which require a minimum personal income of 150,000 or a household income of 200,000. Okay, 740 credit score. They got some really good Infinity Privilege cards, and the Infinity Privilege cards with the credit limit of at least 20,000 minimum. Now, these are higher limits, so of course they're going to have higher income and credit requirements. What does this data tell us? Well, it tells us that these banks will approve you for about 10% of your income. That's what it tells us. So on your credit card applications, it's really important to put down a high number on that income, closer to 180, 190 as a household income, because that's going to get you higher limits. That's exactly what funding companies do. They put higher numbers on the credit card application to get approved for higher limits, because if you were to put a low limit, then they're not going to give it to you. So use your household income at about, if you're in California, 180,000 is like freaking low income. So that's not much. But if you're in another state, that's like, whoa, that's a huge amount of money. Red flag, red flag. Just beware. So just base it on your state. I'm in California, so if I put 180 on an app, they're not gonna blink an eye to that shit. But if I were in another state that has a low income, like I don't know what state, but North Dakota, South Dakota, something like that, something crazy, they'd probably be like, hey, yeah, we need to see some tax returns. Now, here are the credit card application tips. This is the data that you want to put on your personal credit card applications. Your name, always do the same exact name variation. Don't start putting your first name, middle name, and last name when you've only used your first and last name on every other application. You have to be consistent because all of this data that you put on these credit card applications, this is the data that the credit bureaus are getting. Okay. So if you start putting different name variations, you're going to have 10 different names on your credit report. How do you get 10 different addresses on your credit report? From credit card applications, or if you have like credit going to other addresses. If you have a credit card mailed to an address, that address is going to end up on your credit report. If you get an authorized user account and a credit card in your name was mailed to the credit card owner's address, their address is going to show up on your credit report. Don't dispute that address while that trade line's there, by the way. They're going to ask you your social security number. They're going to ask you your annual income / household income. We went over what that number needs to be. Okay. If you put it too low, you're not going to get approved for much. If you put it too high, you might get asked for documents. Employment status. This is where Darwin was saying, hey, I've been messing up. I've been putting that on the CEO. No, we never put that we're self-employed. We are never our boss. Our business is the boss, right? Instead, we put that we are employed full-time and we are the operations manager or the executive director, employed by our business name, okay? They don't need to know that we own the business. If you put yourself on payroll, you're an employee, okay? Even if you don't put yourself on ADP, you could still have your own payroll that you do in-house or whatever. So they don't know that. So again, knowledge is power, right? Do you rent or do you own? They're going to ask you what your monthly mortgage or rent is. This needs to be less than $800, 500 for lower priced states. So again, if I'm in a state like I don't know, Oklahoma or Louisiana, I could easily put that my rent is $500. If I put my rent is $500 in California, they're going to be like, where the fuck do you live, in a tent in someone's backyard or what? Because that does not look right. So 800 is more like it. Even like renting a room in California is at least $1,000. But when we put a higher number on our application, that counts towards our debt to income ratio, which is different than our credit utilization. Okay. So we want to make sure that that's low because we don't want to have a big obligation that we have to pay every month that would take away from the money that we have to pay the bank. Okay. Monthly housing expenses. Oh, we went over that. Monthly spend. Okay, this is important. They might ask you, what is your monthly spend going to be on this card? If you put 5,000, they might approve you for 5,000, but they're not going to approve you if you don't put a high number. They're not going to approve you for what you're not going to spend. So I always like super exaggerate this number because they're always going to counter you. So I'm like, yeah, my monthly spend is going to be like 30,000, 40,000. That's how you get higher limits, because if you put your monthly spend 5,000, they might give you 5,000. But if they're like, hey, this person spends a lot, we got to give them a high limit. That's what we want, but we don't want to necessarily use the high limit on the personal side. Use the personal side to get your decoration, get your trade lines, to get your business side up and going. Now, here's the business credit application tips, because it's a little bit different on the business side. They ask you a couple more questions, so we'll go over that. The business name, again, needs to be the same variation every single time you put it in. Have your business info card in like a Word doc where you can just copy and paste the info. It needs to be exactly the same from the period behind your Inc. If you have the word Inc. in your name, if it's INC period, you need to make sure that your business name is put on the application the exact same way it is on everything, exact same way that it is listed with the Secretary of State. So you can literally copy from the Secretary of State and put it on the business application because it needs to be the same. If you're a sole proprietor, it can be your own name because you're doing business as yourself, right? Business address, it can be your home address. Like I said, I just applied with Chase. I'm using my home address, perfectly fine. You can also put the location of your business if you have a brick and mortar, which is just, a real business office location. Type of business, they're going to ask you what your business structure is, whether you're sole prop, LLC, corporation, S Corp, C Corp. Tax identification number, that should be on your business ID card as well. They're also going to ask you for the social security number of any owner that owns more than 25%. If there are other owners, you don't have to put them on there. Just put yourself on there, okay? Annual business revenue. They're asking you, what is your annual business revenue, right? Pretty self-explanatory. But the higher that number, the more funding you're going to get, okay? Great for stated income applications like credit cards and lines of credit. They're also going to ask you your position, same thing, business operations manager or executive director, that's fine. Another question that they could ask you is, what is your projected business revenue? What do you project your revenue to be once we give you this funding, right? This can be an estimate. Again, I gave a nice estimate to American Express. They gave me 20,000. So thank you, Monthly spend. This is important on the business side. And this is where I fucked up with Chase. I put 25,000 for monthly spend. They gave me 22,000. Had I put 40, 50,000 on my monthly spend, I probably would have gotten a lot more because again, the banks don't want to give you more than what you're going to spend. So if I would have told the bank, oh, my monthly spend's like 5,000, then they're probably going to give you 5,000. But again, you can over exaggerate this number because you're like, hey, well, I could spend all of my, whatever, if you give me a high enough limit. So again, this number needs to be high, 20, 30, 40, 50, 60, 70, 80,000. How are these young kids getting $80,000 business credit cards from Chase? They're putting their annual business revenue is probably close to 500,000. Okay. 480, 500,000. Or maybe even close to 1 million, to be honest with you, because again, they give you about 10%, right? Sometimes, for the most part. That's on the personal side, but the business side, it could 3x that. So you just kind of have to do the math, right? And they're also putting that their monthly spend is going to be 100,000. So those two numbers combined are going to trigger a high limit credit card approval. Okay. Age of business, how many years you have been in business. This is based on the date the business was registered with the Secretary of State. They don't care about the IRS. They don't care about none of that. Okay. I have had people that have operated as sole proprietorships and then incorporated, and you can certainly put down the date that you started operation as a sole prop and let them know that you later decided to incorporate your business. The last thing that they're going to ask you is the number of employees. You'll count as an employee on the credit card application. So if you just have yourself, you would just enter 1. And if you don't have anyone else, just enter 1. A safe number is anywhere between 3 and 5. Okay. Generally, credit cards, when it comes to credit card funding, they don't verify income. It's all based on stated income as long as you don't red flag the system. Again, when we are trying to fly under the radar because we don't want to provide documents, we just want to just get the shit and just do right by it and do the right thing, you kind of have to fly under the radar. So you don't get asked for tax returns. You don't get asked for anything that you don't necessarily have, right? So the income should be below 200,000 unless you can back it. Some people can. That's perfectly fine. And if you can back it, even if you have tax returns that show a higher number, you can project a much higher number. Like I have a gentleman, he has a very high income, and even when we put like 400,000 on his applications, they're requesting tax returns. We give them to him, no problem. Okay, no problem. But again, it's going to flag if it's a high number that is unlikely for that area. You also take the risk of the bank asking for tax returns. This happens a lot with American Express, especially not so much with their business credit cards, but more or less with their business line of credit. So that's why I don't really recommend their business line of credit unless you're a real established business that has been around, that has tax returns, because American Express just doesn't give out high limits. They're great for certain things, but they're not going to give you high limits until they can get an idea of what your spending patterns are. And then they'll give you high limits based on your spending and paying. Here's another little piece of credit game. Business credit cards. I talked about this. You can add authorized users. So for example, I added a lot of my family members to my business American Express cards as authorized users because they would often help me with Turo, fill up with gas and all that type of shit, right? So they needed a credit card to be able to take the car, get it clean, go to the gas station, all that stuff. So they had their own American Express card. It was in their name under the business, but it has no benefit to them whatsoever. It does not help them get approved for anything. It does not, it doesn't, there's no benefit there, right? It simply just gives them a card to be able to pay for the product that you need them to. So the AUs and authorized users are only on the personal side. So if someone tries to sell you an authorized user, just look at the credit card and try to be careful because I have seen it happen. Like I said, I just saw it happen where someone was trying to sell a business credit card as a trade line, and it was actually American Express. And I was like, that's a business credit card. And then I like put them on blast, and then they got out of the chat real fast because they knew they were trying to like scam people. I'm like, that's so ridiculous, right? You would pay for that and then it would never report anywhere. So it's just a complete waste of money. DTI versus credit utilization. A lot of people don't fully understand this. Debt to income versus credit card utilization. The credit utilization is only calculated with your revolving lines of credit, right? DTI calculates all of your debt and what you have to pay out every single month to cover your debt, right? And the ratio can affect whether or not you get approved for a loan or a credit card. If you have high credit card utilization, obviously that's going to affect your credit score. If you have a high debt to income, it does not affect your credit score. For example, I was speaking to a lady today. She said, well, my credit's not that great because I have a ton of student loan debt. And I was like, okay. And I'm like, that's not a bad thing because that debt doesn't affect your credit score. It actually helps it because they're aged. As long as you are in good standing and you don't have any late payments or bad history with them, they're great because it's not hurting you. It might affect your debt to income when it comes to buying a house or something, but it's not affecting your credit utilization, right? So those are the differences between that. The DTI, like I said, is mainly used when it comes to buying a home because they want to make sure that you're going to be able to afford your mortgage payment every single month. So DTI, debt to income ratio, is going to be your debt. Basically, we kind of talked about this already, so I'm not going to re-explain it to you guys. But all of the things that are factored into your debt in DTI is your rent, mortgage, including taxes and insurance. If you guys ever purchase a mortgage, let me just tell you guys, first and foremost, from someone that has experienced this, make sure when you buy a home, your taxes and your insurance is included in your monthly mortgage payment. Okay. because a lot of people buy a home and they don't get their taxes insurance included in their monthly payment. And then at the end of the year, they have a huge bill that they can't pay. And then their house goes to, basically gets taken because they can't pay their taxes. So make sure if you buy a home, you get your taxes and your insurance included in your mortgage payment. It includes the minimum monthly credit cards on the personal side. DTI does not include business credit cards, okay? It's just on the personal side. Monthly auto and student loan payments. Again, this is just the payment that is due every month. Monthly child support or alimony payments. If it's not on your credit report, you do not need to let them know about it, okay? If it's on your credit report, clearly they can see it. But don't overshare things, okay? They don't need to know everything. Monthly payments on any type of loan. So anything that's on your credit report, they're going to be able to see what you owe every month. You've added all those obligations up. You divide the total by your monthly gross pre-tax income, and you will then arrive at your DTI. So for example, if your debt ends up to add up to about $2,000 a month, and your monthly income is $4,000 a month, then your debt to income ratio is about 50%. Generally, in order to qualify for a home, this DTI number needs to be below 40, preferably below 35%. Credit utilization. This is the number one reason besides late payments that will mess your credit score up, especially with these secure credit cards, okay? Credit utilization ratio, sometimes called the debt to credit ratio, how much credit you're using on your credit cards and your revolving lines of credit, which are credit cards and lines of credit. Those are revolving, right? It can also be a store credit card. It could be a furniture store credit card, right? Never buy furniture with a furniture store credit card, by the way. Okay, get a loan and pay on it because it's not going to affect your credit utilization. It'll affect your debt to income if it's reported on your credit report. But a lot of these furniture store companies that offer the pay over time option will allow you to just make a monthly payment. And that's what you want versus a store credit card, because that's going to really mess up your credit utilization. Because say, for example, you go to like Beck's Furniture Store, like I did as an idiot and uneducated. And I think they gave me a $5,000 credit card off the bat. And of course, all of the furniture that I wanted was like $5,000, right? So what did I do? I spent $5,000. Well, now I have a brand new credit card that is 100% maxed out. Of course, that's going to drop my credit score, but me being uneducated didn't know any better. So I learned the hard way. But ultimately, if your credit limit is $10,000, you keeping your credit utilization below 10% is going to be $1,000. You want to keep it below 10% of your available credit limit. Okay. So if you're $10,000 credit limit and you have a $4,000 balance, your credit utilization, you're using 40% of the available credit to you. That's way, way too high on the personal side. We need to keep our credit utilization below 10%, preferably below 20%, 25% at the highest, but no more than 30%, and work really hard to get that paid down. I've maintained less than a 10% DT or utilization for 2 years now, which is why my credit score is in the 800s, because I don't show a risk. And I have over $200,000 in available credit on my personal credit report. So even if I did need to use 10,000, 20,000 on my personal credit, it's a drop in the bucket. It's still not going to affect me too much. That's why we do it, just to have that cushion. If you do have a large amount of debt with credit cards, we want to try to move that debt over to installment loans to consolidate the debt. Because if we have $20,000 in credit card debt and our credit card limits are only $20,000, we're maxed out. So it's 100%. Generally, your credit score is going to be in the 500s if you're maxed out on your credit cards. But if we can get a debt consolidation loan personal loan from a credit union or a bank, a personal loan, or any sort of, loan that they could offer. It could be a home improvement loan like Navy Federal has, which you have to apply for in branch. We want to get some sort of loan, home equity line of credit. Even if you have to take a loan out against your home to pay this debt off, it's worth it because we can move that $20,000 over to an installment loan and your credit score is going to shoot way up because your utilization is 30% of your score. But if we move that over to an installment loan, it's no longer going to be affecting your utilization. Yeah, it affects your debt to income, but you done freed up all this utilization. So now your credit score is going to pop back up probably to close to, 650, 680, 700 over the next 3 months, as long as we keep that credit card balance down. That's the biggest thing that people struggle with. Second chance banking, we talked about this briefly. So if you guys have bad blood on early warning or check systems, these are the banks that you can still open a bank account with, start building a relationship with, even if you have some negative stuff going on. So we've got US Bank, pretty good. And they actually have a $700 welcome bonus right now. So I would highly recommend that you guys check out US Bank. We can get paid for just opening up bank accounts, and a nice bonus like $700 is not bad. Of course, most of those bonus come with strings attached. You have to get direct deposit and a few other things, but all in all, could be totally worth it. Upgrade, First Tech Federal Credit Union. SoFi, they have bonuses as well. Now, SoFi is pretty cool because once you sign up for a bank account, you can refer your friends and family as like an affiliate marketing type of thing. And I think they pay you either like 25 or $50 for each person that signs up for a bank account with them. So that can be a nice way to just offer some affiliate money, especially if you're working with people that have a hard time opening up bank accounts. Axis Bank, Wood Forest National Bank, Chase, Current, that's a fintech company, Bank United, Ameris Bank. Those are the best ones versus like Chime. I hate Chime. I don't know why people would ever want to use them. They are the shittiest bank ever. And believe me, I was so desperate at one point, I was going to get them, but I actually did sign up for them. And then I realized about all the fees that they had. And I was like, hell with them. Cancel that shit. Here are the best banks for ITIN friendly folks. So if you do not have a social security number, but you have an ITIN, you can still get funding on the personal side and on the business side. There are a lot of banks out there that still will provide credit cards and funding options to individual taxpayer identification numbers. And it's basically, just the kind of like the same thing, right? They're just going to be using that. Bank of America is one of the most popular. They're super ITIN friendly. American Express is ITIN friendly. You'll see right here that you can see they have Social Security or ITIN. Chase, they're great. Social Security or ITIN. You can even partner or add someone with an ITIN as a partner into your business. A lot of people call these credit partners. And funny enough, like I think I just saw an email come through like within the last month of someone saying, "Can you help me find a credit partner?" And I was like, "Oh, yeah, that's not what I do." He's like, "Well, I'm in another mentorship and they told me that I need to find a credit partner." And I was like, "Oh, good luck with that." Not here. I'm not anyone's credit partner, but I can teach you how to have good credit for sure. But if you have family or friends that do have good credit that want to be a partner of your business and maybe your credit isn't super strong, you can have them come on to be, some sort of credit partner for your business, write up an agreement for them. And this will allow more funding to get issued for your business. They would be personally liable for it because it would require a PG, but it's not going to report on their personal credit unless it defaults or something like that. So that's why it's important to understand all of these different options for you guys. So we got through 136 slides tonight. It's already 9:20 here in California, so it's like super late with you guys are. We're going to finish part 2 of this next Friday, guys. And there's like a ton more. Like I have a total of 231 slides. So next week we're going to be talking a lot about like the bank accounts and some of the options that they offer. I don't know why we can't see the slides, but just be ready for next week because I'm going to tell you guys right now, I spent all week putting this slideshow together for you guys to try to include as much information as possible. And even though it's in one slide, I'm going to drop part 1 in with this video by Sunday inside of the school app. So you guys will be able to review the slides, look at the information in detail. And then next Friday, we're going to review part 2 of this, where we're going to go more into detail about some of the programs, who you can double dip with, and some of the good areas for you guys to go get funding for, whether you have good personal credit or not so good credit. There's a lot of funding places out there. You just have to understand what type of funding is available and is it going to be a good option for you. Like I've been offered a lot of different funding, but at the end of the day, once I broke down all the numbers, it just wasn't worth it to me. You know, it's like, damn, I'm just going to put myself in more debt if I take that. It's tempting, don't get me wrong. I could definitely use an extra 50,000, but like, no, not right now, you know? So, I want to thank you guys so much for being on the call tonight. You guys could have been anywhere, but you decided to be here. So I definitely appreciate you. And yes, I will be putting all of this in the group. The replay and the first part of the slideshow will be available in the classroom section. So if you guys are inside of the school app, you always want to go and you can download the app onto your phone too, guys. So make sure you download the app on your phone, head over to the classroom section. This is where you're going to see all of our previous week's calls and slideshows. So all of the slides that I do every week are uploaded into this classroom section. So I'll upload this video along with part 1 of the slides, and then we're going to be going over part 2 next week. So I hope you guys had fun tonight. I'm going to open it up for questions. Anyone have questions? No? Not a
Yeah,
goddamn.
yeah, it's like almost 1 o'clock.
I know. Listen, I was putting this slideshow together this week, right? And I was like, fuck, bro, like I got 200 slides. I said, I'm gonna have to break this bitch up into 2 because ain't no way I'm gonna be able to cover all this information in one class on Friday. I said, I'm gonna have to break this up because this is a lot. This is a lot. And I just kept on thinking about more and more stuff to add into it. You know what I mean?
Yeah, where do you get all this information from?
I've joined a lot of mentorships. I've had a lot of coaches. I have a lot of personal experience with credit. I have a lot of clients too that share their experiences with me. You know, I'm a coach, so like today I woke up this morning and I didn't have no calls on the books. And normally I don't take calls on Fridays. I think I only have about 3 slots on Fridays that someone can actually book with. So all of a sudden I start getting people booking back to back, and 3 people book calls with me today. And so a lot of people share their stories with me and share data with me. And I look at credit reports all day too. So I'll look at credit reports and I can understand data now. That's really powerful. When you can understand data, you can compute it a different way, because the biggest problem that I had before was I didn't understand the data. I didn't understand how to read my credit report. It was overwhelming. It was a bunch of different colors. I didn't understand what any of it meant. So it was just like, overwhelming, can't do, no, stop, don't, you know. But once you start understanding it and reading it, it becomes like, oh, wow. So this is what this all means. And then you have that aha moment where you're like, this shit was never taught to me. I'm fucking angry about this. It's so simple, but yet so complicated that nobody wants you to know about it. You know?
Yeah, absolutely. I agree. It is a lot to intake, but I guess a quick question that I had, I was going over your business credit trade lines, and I see you start off with the 25,000. Now, are these backdated trade lines or they're going to be new
Yes,
trade
yes.
lines?
So we do backdate them. Great question, by the way. And basically, the way that it works is if you want a backdated trade line, we have to backdate it based on the amount of time that you are in business. So, for example, I was actually just working with someone with same situation. His business had been around for, I think, 4 or 5 years, something like that. So we would have been able to backdate it approximately 2 years because he wanted, I think it was like 50,000 or 75 or something like that. So basically, if you are a business that has been around for only 2 years, it's very unlikely that a financial institution is going to give you like 75, 100,000, 250,000 as a year-old business. So the restrictions lie within the time that you have been established. So 4 years in business, we can backdate it 2 years. 5 years in business, we can backdate it 3 years. 6 years in business, no, I'm sorry, 5 years. Yeah, 3 years. 6 years, 4 years, so on. So, how old is the business?
So it's basically like close to half or a little
Yeah,
closer, a little
basically,
closer
yeah.
to half. Now,
Because
when you
yeah,
say the backdated is scheduled about how old is the company, is that when it was filed and structured with the IRS or when the business
with the
bank account
Secretary of
was
State.
created
Yes,
with
with
the
the Secretary
Secretary
of
of
State.
State?
Everything on the business side goes based on the Secretary of State.
Okay, so long as as long as it was established, so the birth date is when it was established with the Secretary of State,
Yes.
and long as it's been paid and being in good standing,
Yes.
correct? Now, say if it was one that was in good standing for a period of time and then it got dissolved and then you reinstated, how would that affect it?
It would still be well, it depends on the state because some states you can tell when a corporation has been dissolved and then reinstated. So a bank could if it had been um if it was just like a year or two, then okay, yeah, that shit happens. We get it, right? But if it was dissolved for like 10 years and then reinstated,
Yeah,
we're
they're just
gonna
gonna
go
draw
by the
suspicion.
reinstatement date, right? So you kind of have to gauge it on the data. Like I had a business in Delaware and it was in like bad standing because I didn't file the franchise taxes and didn't pay them. And I just did all that shit and I just had to file a reinstatement document, which you have to pay for as well. So that's no big deal. I could still use the initial date that I started the business. But if I had allowed like 5 years to pass, it may not be worth it.
That's a different story. Okay.
Yeah, exactly. And some states don't even report if the business has been reinstated or anything like that. So it can vary by state. The biggest thing that I do is I ask the people at the Secretary of State, like, hey, if I reinstate this business, is it going to show that I reinstated it? And I think in was it Florida or something? One of the states was like, yeah, it will show. So it's kind of like, oh, well, is it really worth it? Because sometimes the reinstatement fees can be thousands of dollars.
Yeah, I got one right now that's $1,200 that I just kind of let
Yeah.
go. But I was thinking
Yeah.
about reinstating. Sometimes they say the bank have the system where they can see that it's been reinstated, just like they
That's
can
only
see.
when the Secretary of State shows it on their website. Not every Secretary of State is going to report it. That's why you want to call your Secretary of State and ask them if they are going to be reporting the reinstatement information to be available to the public.
Okay, okay. I know some other people may have questions.
I do.
The last thing was that what is the turnaround time? Say if I had a client who needed a trade line because she's trying to get some business funding. I know that you say tell them 60 days, but
Yeah, on the business side,
what's been your
it takes
results
a
as
lot
far as the post
longer.
and turnaround?
Yeah. So on the business side, um, The business auto trade lines can take up to 90 days to report, so they take a lot longer, and the business auto trade lines only report to SBFE. The financial services can report to Experian or SBFE or both, right? You can do a package where they report to both. Experian and SBFE financial services trade lines will take about 60 days to populate. Usually you'll see them pop up on Experian first, and then SBFE is closer to that 60-day period. So it does take some time. On the personal side, it's a lot faster because
Yeah.
it's a different system.
Okay. Someone else had a question.
Hi,
Yeah.
Nicole.
Hi there.
Hi, that was a great presentation. Thank you.
Absolutely.
Listen, I wanted to ask you because you mentioned in the past that if you have a credit repair business starting out, maybe to hold off on signing up with the state Secretary of State. But the recommendation is also to open up a business account. So, how are we supposed to provide the appropriate documentation to the banks if we're doing that?
Okay. Great question. Two separate things. So let me give you an example. So let me use Florida. What state are you in?
Maryland.
Maryland. Okay. Maryland credit repair business. Actually, they're called credit repair organization. So basically, you can still start a business. They don't need to necessarily know that it's like a credit repair business. But some states are going to make you register as a CRO, which is called a credit repair organization. And that's a separate registration than your Secretary of State registration. Two separate things. So as long as you're, like for example, right here, these are probably going to be a list of like the people that are listed as like a CRO, which is a credit repair organization or something like that. And I'm really not even finding their licensing, but it's a special licensing with the states. And a lot of times you'll have to register with a different entity. Like in California, we have to fill out a completely application. And right here, California Contract Research Organization list. No, that's not it. Sometimes it's hard to find, but yeah, it's two separate registrations, and you're going to need a bond for it as well.
Okay, because state of Maryland requires that you have a high credit score as well as $20,000 in the bank. So I was wondering if it would be recommended to um, go the foreign entity. I'm not sure if I'm saying that correctly, but go that route.
Yeah, yes, ma'am. Absolutely. Because you like myself, we want to fly under the radar. We don't want to have to pay the state a big chunk of whatever they want from us, right? Like California, they require $100,000 surety bond, which is ridiculous, and it's just stupid, right? So they have each state has like these different requirements that they require, and you can totally start a credit repair business in like Wyoming, for example, because Wyoming, there's no credit repair laws, right? Now, these credit repair organization licensing registrations for each state are to protect the consumers of that particular state. So what they are saying is if you are going to be helping consumers in the state of this or in the state of Maryland, then you need to be registered. So there's really, you could try to fly under the radar, but eventually you're going to need to register as a credit repair organization if that's going to be your sole focus. You don't necessarily need to right off the bat because again, they have a lot of stupid requirements that they like to, get people on, and they want surety bonds and all sorts of stuff. So it can be a pain in the butt and just a lot of extra expenses when you already have a lot of expenses starting this business. So that's why I usually tell people you can wait and just be, like a consulting business for the meantime.
Okay, thank you.
And I'm going to try to find the information on Maryland because I have not come across anyone in the actual state of Maryland. I've come across Texas, California, a lot of Florida people. A lot of people start credit repair businesses in Florida. I guess the taxes are better out there. I don't have a business in Florida, so I don't really know. But usually this is where you want to be listed at right here because this is credit counseling agencies, and this is with the Department of Justice.
Okay.
So that way people can, it just protects the consumers to basically say that this credit repair company is, in compliance with the state and not trying to scam people.
Okay. Oh, that's good.
Any other questions out there? License fee and requirements. Let's see what they're talking about. Okay. So here's the prerequisites for Maryland. Looks like this is a credit service business license. Surety bond, $50,000 surety bond. Maryland Office of Financial Regulation does not provide a paper license for this license type. Okay, that's fine. Um, it looks like it's just the surety bond and the application. The application could be confusing. And then there's, of course, the registration fee of $850. And then the MD application, the MD license registration fee, and then the MD application fee. So that's $950 just for that. And yeah, it looks like it's just the surety bond. I don't see, where did you see that they required you to have 20,000 in the bank?
I'm
Can you
not sure
check
if I
for?
saw it online, but I did call them and they do want your credit reports and they want the $20,000 in a bank account.
I never heard of that either.
Right here. Liquid asset letter. Liquid asset letter. So they want a liquid asset letter verified by a financial institution showing $20,000 in funds to be used by the business. A reviewed or audited financial statement may be substituted for the liquid assets letter.
Yeah, just use audio financial statement.
Yeah,
Can you check
I
for New York City, Nicole, please?
for New York, I'd have to look it up, but yeah, each state has weird requirements sometimes when you really look through their application. they have a lot of these little ones that it's like, well, gosh, you make it hard for people to register, and then people wonder why there's so many people that help with credit that are not registered and licensed. Like Vance said, when he first started his credit repair, it took him what 5, 6, 7 years to get registered as a CRO in the state of Oklahoma. And the only reason why he did it was because he was suing people in court, and some of the third party lawyers and people were like, oh, he's not even a registered CRO. So he had to register because he was up in the courts. But a
And
lot,
that's the concern. I mean, how are you supposed to start out with $20,000?
yeah, that's a good question because it says liquid assets, right?
I mean, just get approved for a $20,000 credit card
You
and
can
just
get
use
a
that.
$20,000 line of credit too. That could be a liquid asset.
But then why do you
Hmm.
really want to be a credit repair company? Like, do you feel you really have to be that? You can be a consulting company, you can be a financial literacy. I have a financial literacy platform, and I don't present mine as credit repair. I
I
mostly
don't
do like
present
credit
mine as credit repair
restoration.
either because
Yeah,
I
you can
don't
just
want to
change it up.
register.
Yeah, you can just change it up and be anything else, a
And you know
financial
what?
literacy
Like,
platform, a consulting company, anything
yeah.
else
But
besides
what if
that.
you have credit in the title? Does that still,
You don't want to do that anyway.
you were breaking up.
It's not if you're trying to get funded for it. I say you don't want to do that anyway. You don't want to have credit, financial, lending, funding in your name of your company anyway, because you're hindering
Mhm.
yourself.
Yeah, you don't really want to because I have a business that is named Credit Coach Pros, and I never really tried to get funding in that business for that reason. Like, I never had an issue getting bank accounts. Like, I was able to get a bank account with Bank of America, no problem. I got merchant accounts, like I got all that shit, but it wasn't cheap because my business name had credit in it. So when I did get a merchant account, it was like a high risk merchant account that was just a crappy deal. And they had a large reserve, meaning they took a percentage of all of your money to meet this reserve. So in case you get a chargeback and you don't have the funds to cover it, your reserve account will cover it. So it's just a bunch of horse shit, to be honest with you. But yeah, what I would do is think about changing the business name
Okay.
just so
I
it's
already
something
spent
low
quite a
risk.
bit of money and having it in that name. So now I have to spend money too.
Well, the good thing is, I'm gonna tell you, you can do a name change with the Secretary of State pretty easily, and you can do that yourself by just going to SOS Maryland and doing a business name change. And then once it's updated with Maryland, you can do the IRS name change, and it's free. The stuff with the IRS is free, but the SOS, there's probably going to be a fee of some sort because they charge for everything. Like, it's ridiculous.
Even though I'm not even affiliated with the state yet, I was holding off on that piece.
Oh, you're not
Well,
filed with the Secretary of State yet?
No, because it was recommended, I thought, to hold off on filing with the state
Well, you still in a
because
good
I'm
space?
still, um, hmm?
I say, well, you're kind of still in a good space because it's really not registered. So it's not
right.
registered with the Secretary of
Oh,
State, but it's
okay.
been incorporated. Have you already incorporated it?
No, I haven't gotten that far, but I was setting up, logos and other things of that nature, to, business cards and things like that. So, I mean, not a
Oh, well,
ton of
yeah, that's just, I mean, not to mean to cut you off, but that's just a small expense right there. And it's really like you haven't even really birthed the company if you don't have it registered with the Secretary of State. Have you opened up the bank accounts?
No, that's what I was saying before, that I was holding off on that because it was recommended to wait a little while since it's a very new business.
Oh,
Yeah,
yeah. I
I
mean, I would
think
just,
there was a disconnect there. The recommendation is to wait a while to get the credit CRO registration done, not the business registration. So you can register your business as just like a normal LLC, S Corp or C Corp with the Secretary of State, get your business started. But then there's a whole nother registration process for an actual credit repair company that you have to go through with, you know, whoever manages that within the state. But the first step is to definitely get your business registered with the Secretary of State.
Okay, let me just clarify because I think I'm hearing what I missed. I can call the business anything, and it doesn't necessarily have to be associated with credit repair or anything. It's just a business.
Mm-hmm.
And then at such point, when I decide to say, hey, I think I'm going to stay in this line of work, then I can go get it registered on that NMLS page that you saw
Correct.
in Maryland.
Yes,
Okay.
absolutely. Absolutely. And I'm sorry that that was misunderstood. That was definitely my fault. But yeah, we definitely want to get in with the Secretary of State inside of Maryland so you can get your business registered, and then you can, decide if you want to actually register that business as an actual CRO company, which is a credit repair organization.
Okay. Well, thank you. And thank you, Manifest. I appreciate your feedback.
Okay, don't do it.
All right, guys.
My
Any more
my
questions
feedback,
for
my feedback to
tonight?
you
I
is
know it's
don't
late
do
where
it.
you guys are at, some of you in the East Coast. It's late for me. It's 9:45.
Maybe next
Well,
time you can
I mean,
check
I have a
like
lot of
what's the
questions.
requirements for New York City.
Yes, let me put that on a note and we'll cover that next week for NY, and I'll do some research and see if I can find some info on the New York CROs. So definitely I'll put some stuff together for that so we can cover it next week. But I'm
Okay.
gonna go ahead. We're gonna wrap up the call tonight. I know it's late for you guys, and we'll reconvene next Friday, same time, same place.
Nicole, before you go, can I have a minute of your time?
Sure, sure, absolutely.
Okay. There was a bank that you had brought up, Ally. Now,
Yes.
I have my car payments through Allied Financial.
Okay.
Is that something that I should follow up with through and build that relationship some more?
Well, the way that Ally works is so you can't go to Ally directly. Ally partners with auto dealerships. So Ally is only offered at a dealership level. You have to find a dealership that offers Ally financing to be able to get Ally financing. So you just paying your car payment on time is building your relationship with them. So at some point in the future, if you wanted to get a business auto loan with them, they would already see your payment history is solid, even though like Ally is actually one of the few banks that offer a no PG option. They do offer business auto loans with a PG, which will get you a lower interest rate, but a lot of people would prefer to go the no PG route because it just makes them feel more secure. But honestly, if you go the no PG route, the interest rate is going to be a lot higher.
Okay, understood. Thank you.
Absolutely.
I will.
Nicole, I came in on kind of like I was multitasking. Did you speak on the H corporations? I seen that was one of the topics.
Not yet. That's going to be next week.
Okay, all right,
Yeah,
next week.
but
So
I
this
do
is
have. I
Tyrone
have.
as well. Was
What's
you
that?
able to? This is Tyrone. I was reaching out to you about the your next availability. We was going back and forth in the chat.
Oh yeah, I was trying to call you today. Did you send me your phone number?
No, actually, didn't. I was crazy busy today. So what's your next availability? I can just make time.
Tomorrow I have some time tomorrow. I'm working tomorrow.
Okay, I'll send you the number through the chat.
Yeah, yep, for sure. And I'll call you tomorrow. I just had a couple people book calls with me, but I have some time um between calls tomorrow. I'm in California, so I'm PST. Are you East Coast?
Yeah, I'm East Coast. I'm in
Okay.
North Carolina.
Okay, cool.
Or
Yeah,
whatever's
just send me your
convenient for
phone
you, I'll
number
make.
and I'll call you tomorrow.
Okay, thanks.
Okay. All right, guys, we're going to wrap it up for tonight. Thank you guys so much for joining. I look forward to seeing you guys all next week. And I want you guys to make sure to be able to get your weekly wins together, because each Friday we're going to start sharing our weekly wins so we can share with each other how far we've come in just a week's time. So see you next week. Enjoy your weekend, and I will have everything uploaded by Sunday.
Thank you.
Bye, everyone.
Bye.
Thank you. Bye bye.